is not a major game changer for the ECB's forecasts. We will bring you that interview with the ECB president. And the axe falls again at Goldman. The bank prepares to slash jobs for the second time in 3 months as the focus returns to cost-cutting. Good morning, everybody. So just moments to go until the start of the European equity trading session.
Good morning, everybody. Hope you're okay today. Staying safe. I just wanted to point out that I sold overnight euro, as you can see. We purchased yesterday at 118.75 and we placed stop on profit at 118.70, and overnight it was executed. So we have already £500 in profit. Okay, morning again. Keep following us, purchase strategy, and also you can make a good profit. I'll speak to you later.
1%. So far, the markets that are open are moving lower. We have some strength coming through in both the euro and the pound, if that acts as a bit of a headwind for some listed on those currency-denominated markets. But the dollar a little bit weaker, down around 1 or 0.2%, depending on which the indexes you look at. So European equity markets opening lower. The CAC 40 now opening down by 0.3%. The DAX down by 0.4%. So modest losses for Europe. That's as wide distribution of a vaccine shot is still months away, and cases are spreading quickly in the US and Europe. Joining us now is Vincent Juvens, JP Morgan Asset Management Global Market Strategist. Vincent, very good to speak to you this morning. Let me ask you how you are managing to reconcile concern around the short term, concern around the virus trajectory through the winter, with longer term optimism, with the optimism around a vaccine that maybe kicks in Q2, Q3 next year. How are you navigating through the short term uncertainty?
Well, if you look at the positioning of JP Morgan Asset Management in its multi-asset portfolio, we remain long risk and long equities in the portfolio, with this prospect, obviously, which have been thanks to the news of several prominent vaccine providers. Obviously, it's offered light at the end of the tunnel. By the end of next year, hopefully, we should get out of this health crisis. So in the meantime, it may remain volatile. But for market, what matters is obviously the future prospect, where we live a year from now. And clearly, the news have recently been positive. This doesn't mean, obviously, that it will be solved overnight from an economic perspective. We were discussing earlier on this year the shape of the recovery. I guess for central banks like Christine Lagarde, which you alluded to in your introduction, it's clear that in Europe, in the US, we may have to wait until the end of 2021, maybe the start of 2022, to get back to the 2019 level. So the economic path is going to slowly recover, but for economies, it's already, for equity markets, it's already the end of 2021, 2022, and it's already trying to position for the theme which will unfold at this particular moment in time.
Yeah, perhaps rightly getting ahead of ourselves then on equity markets, Vincent. And on that subject, on tying together the underlying economy and market sentiment and market positioning, I talked to the CEO of Maersk. You know, they carry 1/5 of the world's global container shipping, and so have some real insight into what's going on in the global shipping market. They see 2021, the market in that year, equal to or slightly better than 2019. Does that tell us something useful about where the economy is heading?
It's quite interesting because since the start of the crisis, we have talked many times about the possible deglobalization due to the COVID crisis. And it's actually something we haven't seen so far. We can month after month see in a Chinese export figure that exports globally are quite resilient in this crisis, which is surprising. When we look at 2009, where global GDP shrank by 0.1%, global export dropped by 13%. This year, we're probably going to face a recession 45 times more pronounced than in 2009, and still exports are only expected to drop by 10%. So this resilience is quite interesting, bode well, obviously, for exporting countries like China, and hopefully in the coming months, more and more for Europe.
Yeah, over recent months, we did talk, Vincent, about how companies were going to have to make their supply chains much more resilient. And as you say, that maybe is part of the narrative that's dropped away a little bit. Are you hearing companies talking about that, about trying to shore themselves up in case we encounter something like this again in the future? Or is this the kind of thinking that maybe will come through post-pandemic?
Again, yeah, indeed, there were a lot of reference to possible repatriation of some part of the value chain in the US, in Europe. We've seen that at the margin for a couple of sectors, but it has not been widespread at all. Again, the export figures speaks for themselves. Let's say comment like you just had from these prominent shipping companies also tend to show the contrary. So at the moment, global value chain remain in place. I would say also that the trade agreement between among Asian countries over last week can also bode well for, let's say, globalization, generally speaking, and for global trade, generally speaking. So that's quite interesting. Obviously, China export at the moment massively healthcare products, face masks, and these type of protection. But also, as we enter the end of the year with the holiday season, I would expect export and Chinese export to remain quite resilient in this environment. So it's a lot of talks about deglobalization, but when you look in the facts, it's actually not the case.
Yeah, we talked a lot about the RCEP, that Asia trade deal a little bit earlier on this week, Vincent. Let me ask you about the UK, because we've seen further headlines suggesting perhaps we are very close to a Brexit trade deal, a post-Brexit trade deal. Certainly our reporting suggesting early next week could be a possibility. And on the Markets Live blog, they've been asking today which UK assets will benefit in this post-Brexit trade deal world. What would you suggest? What would you point to as UK assets that are going to be in demand?
Oh, the pounds is obviously the most obvious one. It is depressed at the moment due to this Brexit uncertainty, maybe beneficial for equity market, although we have some doubt there, given the fact that obviously there would be a positive story for UK asset and UK stock due to a Brexit solution, but we would then in a second stage come back to, let's say, the sectoral composition of the index, which is commodity or energy heavy and bank heavy. And these are two themes which may continue to struggle a bit in the coming months globally and including in the UK. But there would probably be some kind of relief rally, probably more seen on the pounds than on the rest, but UK equities would likely follow. In addition, we need to recognize that obviously this Brexit discount is quite huge on UK equities. When you look going forward, this valuation discount is obviously one of the tailwind that we see in the next 10 to 15 years for UK equities. Sorry, we just released our long-term capital market assumption, and one of the conclusions that we've drawn is that even though UK asset and UK equities have this Brexit uncertainty discount and this exposure to energy and financials, this valuation discount is a huge tailwind. So this is one of the markets where we have the highest return expectation for the next 10 to 15 years due to this valuation discount.
Thank you very much for that, Vincent Guvens, JP Morgan Asset Management Global Market Strategist. We will talk a little bit more about the green agenda when we come back. A green industrial revolution. We'll look at the UK's £12 billion plan to tackle climate change. We'll talk to Vincent about the investment opportunities that exist around energy transition. This is Bloomberg.
the original stimulus post-COVID was not sufficient. It really did not reach those people, either the employees or the small businesses that were in the greatest need.
Not getting to the places it's needed. The view there of the former Secretary of State, Hillary Clinton, talking to Bloomberg's New Economy Forum about the shortcomings of the first round of US fiscal stimulus. Let's talk about opportunities to invest in green. The UK Prime Minister Boris Johnson has announced a £12 billion plan to boost green industries and tackle climate change. He says the 10-point plan, which includes banning the sale of new gas and diesel cars, or petrol and diesel if you're in the UK, from 2030, that will create or support as many as 250,000 jobs. Vincent Juvens, JP Morgan Asset Management Global Market Strategist, is still with us. And you've given a lot of thought, of course, to opportunities around the climate transition, the energy transition, Vincent. How do you integrate green bonds into your strategy? I was looking at how they've performed versus other bond classes, and they seem to do quite well. How do you integrate them?
Well, green bonds are a perfect instrument for issuers, obviously, for those financing, obviously, or green transition or carbon transition, because obviously it's a cheaper way to finance yourself. For investor, it's obviously something which is attractive, given the fact that we may see going forward more focus from central bank on this part of the market. The ECB already announced in September that it was accepting green bonds as a collateral in the context of refinancing operation. You know, we've heard over the last couple of months many central banks mentioning the fact that they do see climate change as part of their mandate. I believe that green bonds are probably the easiest way, the smoothest way for central bank to really take climate change in their mandate and support the effort for green carbon transition by targeting green bond market through their QE program. So for investor, it's obviously the hope that a central bank will support this market, which should obviously be beneficial from a return perspective. So win-win, issuer and obviously investor in this context. It is a market which is going to grow massively, given obviously the fact that Europe decided to leverage on green bond market to raise 30% of the means dedicated to the recovery fund. It will launch in the coming weeks.
Yes, Larry Summers, I remember earlier this week, was very sceptical about what central banks can do in terms of climate change. But this does seem to be something, an area where central banks are very active, of course. Let me ask you about carbon pricing initiatives. Do you see them spreading, covering more of global emissions, essentially, and also carbon pricing becoming more expensive? Is that one way that the market wakes up to the challenge of climate change?
Definitely. That's one thing we're looking at. Europe is obviously leading in this respect. Our emission trading scheme is one of the most developed globally, both in terms of coverage and in terms of pricing. This said, to be successful, a climate strategy would need to be widely spread globally. And we need the likes of the US, the UK, Japan, China to join. China has already announced that it would merge several of its regional emission trading systems next year to form one of the biggest emission trading schemes in the world. So China, Europe are joining force in this respect. Obviously, we need the US to join, obviously, this type of effort. We will see at the political equilibrium in the US, a divided Congress made things less easy for the next president to really push through for meaningful higher carbon price in the US. So when dealing with climate change, policymakers always have the choice between carrot and sticks. And obviously, higher carbon price belong to the sticks camps, obviously, and which are obviously less easy to deploy. There's more reluctance to deploy them. But we see it in Europe, we see it in China, and with announcement like today in the UK, an announcement of several countries to get carbon neutral by 2050, we need to be aware that carbon pricing, that you want it or not, is going to be part of the equation. So that's very important for investors. They will need to monitor more accurately the carbon intensity of their portfolio because carbon prices are going up.
Indeed. And how much are investors talking to you when it comes to equity market portfolios then? How much are they talking about the carbon intensity of portfolios? And how easy is it now to establish the carbon intensity, Vincent? Is the data up to it?
Well, obviously, there's always an issue of data quality, but the requirement for corporate to disclose their carbon intensity is there, and we see massive improvement. Clearly, at JP Morgan Asset Management, it is part of the element that we are monitoring with in-house research. And I can tell you that in a lot of client discussion that we are having here on the continent, the carbon intensity of a portfolio is one of the elements which can differentiate a fund versus another. So it is more and more important to win businesses because it's a way to show that we have a good risk management in place. Next to other risk metric, carbon intensity has become one of the very important risk metric we're looking at in traditional portfolio as well as in ESG portfolio. So a very important theme for us at the moment, and I would expect it to only gain traction going forward with more regulatory focus also in this space.
Vincent, thank you very much. Vincent Juvens, JP Morgan Asset Management, Global Market Strategist. Vincent will be continuing his conversation on Bloomberg Radio with Caroline Hebke and me at 9 a.m. UK time. Let's get a Bloomberg Business Flash, some of the top corporate stories that we're covering today at Bloomberg. Robinhood is looking into a potential IPO next year. Sources tell Bloomberg the trading platform is asking banks to pitch for roles in the offering. It could happen as soon as the first quarter of 2021. In September, the firm was valued at around $11.7 billion. No official comment as yet. Unilever plans to boost sales of its plant-based meat and dairy products. That's amid growing demand for healthier and more environmentally friendly foods. It's targeting €1 billion in alternative protein sales in the next 5 to 7 years. It also wants to halve its food waste faster than previously planned. Now, the biggest takeover of a UK company this year, Canada's Intact Financial is buying RSA Insurance. It's teaming up with a Danish insurer on the £7.2 billion deal. RSA is set to be broken up, with Intact keeping its UK, Canadian and international operations. That is your Bloomberg Business Flash. Coming up on the programme, Christine Lagarde doesn't see the vaccine news changing her stimulus plans. We'll bring you our conversation with the ECB president next. This is Bloomberg.
we are looking at a future where a major chunk of education, healthcare, shopping, food experiences may happen online. Our cities need to be ready for the convergence of the physical and digital worlds.
That was the Indian Prime Minister Narendra Modi speaking exclusively to Bloomberg's New Economy Forum. Quick check on the markets, 21 minutes into the trading session, down 1/8% on the Stoxx 600. The FTSE is a bit of a laggard today, down around 0.4%, despite some M&A pushing, the parts of the insurance sector a little bit higher. Autos very much in focus because of that EU car registrations number, and industrial goods, that is the biggest losing sector today. Let's talk about what's going on at the ECB. The news of a vaccine doesn't really change the ECB's plan to add monetary stimulus. That is according to President Christine Lagarde. Speaking to Bloomberg at the New Economy Forum, she said the central bank is focused on stopping the current economic slump from getting worse.
I'm not sure that is going to be a major game changer for our forecast, simply because what we had anticipated in our baseline was that at some stage in the first half of 2021, there would be a vaccine and that it would be rolled out in the course of 2021. So it might be a little bit accelerated given the news that we're receiving from the various horizons, Germany, US. But I don't think that is going to be a game changer, so to speak. I think that our forecast is being revisited almost as we speak, and we will be releasing on the 10th of December. So I don't want to anticipate what the outcome will be. But, we've seen, before we had this great news about vaccines, we had some pretty negative news concerning the second wave that really came about certainly earlier than anything we had anticipated. And together with that second wave, we have also that list of containment measures and lockdown measures that have affected one country after the other in the euro area. So we had a combination of those sort of developments that affected negatively the situation, and that also has an impact on the outlook.
So what kind of economy do you see for Europe and the world because of the extra restrictions? Is it, a double dip? Is it something that is so uncertain at the moment because even if we get a vaccine, we don't exactly know what shape it will take or how consumers will behave?
I don't want to downplay the very good news that the vaccines were. But I think that, as a central bank, we have to be mindful of not just the short term and the news impact. We have to be mindful of the overall situation. And in that vein, I think that the second wave that we saw presents risks.
That was the ECB President Christine Lagarde speaking to Bloomberg's Francine Lacroix at the New Economy Forum. Let's get to the banking sector. Goldman Sachs is preparing to trim its workforce for the second time in just 3 months. After ending its moratorium on firings during the pandemic, the lender is now pushing to improve efficiency, and job cuts are part of that story. Joining us to discuss is Bloomberg's Danny Berger. How deep are these cuts going to go then, Danny?
Well, certainly deep compared to the beginning of the year when the pandemic hit and Goldman froze job cuts. But they say, according to people familiar, telling Bloomberg that they're not likely to be any more steep than the 400 job cuts that we'd heard from Goldman in September. But executives apparently want to cut even more and steeper cuts throughout the rest of the year. So we might see some of the biggest job cuts yet from Goldman Sachs. They're also likely to move around some parts, continue to move people from financial hubs to places like Dallas in order to save costs, Anna.
Yeah, and you often hear from banks and other businesses that during tough times, you get focused on the things you can control, and cost is one of them. So what sort of cost-cutting pressure is Goldman under?
Well, here's the thing, Anna. It's hard to say that Goldman is having that tough of a time while other banks are suffering because of the loan loss provisions they've been building up. Goldman has done pretty well. In fact, they're on pace to exceed $40 billion in annual revenue for the third time. Still, they laid out a goal to cut $1 billion in expenses in January, and it's something they're looking at. How do we continue to meet that goal? And one of the reasons they want to meet that goal is because of this chart here. They continue to trade under book value. Their stock continues to vex top executives, so perhaps cost-cutting, becoming more efficient, can fix the disconnect between the revenue Goldman's bringing in and their stock price, Anna.
Thanks very much. Thanks very much to Danny Berger for a focus there on the banking sector. Up next, don't own bonds, don't own cash. That is according to Ray Dalio. Don't miss our exclusive interview with the Bridgewater Associates founder and co-chairman. That conversation coming up next. European equity markets just turning flat, actually. FTSE 100, a real underperformer, down by 0.3%. Elsewhere, things looking flatter, approaching back up towards the flat line. US futures making very modest gains early US time. This is Bloomberg. Welcome back to the European Market Open. Here on the European Market Open on Bloomberg TV, 30 minutes then into your trading session. And we've got European equity markets very modestly to the downside, so not much in it. We saw bigger losses earlier on. And in fact, the FTSE 100 is a bit of a laggard, still down at 0.3%. And in fact, we've seen some moves in British land to the downside. That's been one of the big movers in the earlier part of the session on the London market. So we keep a focus on that. Elsewhere, the FTSE MIB actually in positive territory. US futures point to the upside. Let's get a Bloomberg First Word News update. All the big stories that we're covering here this morning at Bloomberg. The Senate has blocked the nomination of Judy Shelton to the Federal Reserve Board. It's a setback for Majority Leader Mitch McConnell and President Trump. With two senators in quarantine, the Republicans fell short of the votes needed. The Senate can reconsider her nomination, but time is running out. The UK is announcing a £12 billion plan to boost green industries and tackle climate change. In a blueprint, Prime Minister Boris Johnson says the move will create or support as many as 250,000 jobs. Sales of new petrol and diesel cars will be banned from 2030, and the government will invest in electric vehicles and renewable energy. 3 former lawmakers in Hong Kong have been arrested over a scuffle in the Legislative Council chamber that took place earlier this year. They've been detained for allegedly trying to disrupt a vote banning criticism of the Chinese national anthem. The arrests are the latest blow to Hong Kong's democracy movement after the passage of a sweeping security law in June. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Currency and asset diversification should be driving investor portfolios right now. That is according to Bridgewater Associates founder and co-chairman Ray Dalio. He spoke exclusively to Bloomberg at the New Economy Forum.
Every individual, every company, every country they're good. How well they are depends on how much their income is relative to their expenses, and how much their assets are relative to their liabilities. So you can see radical differences in the financial consequences of that. Second, the ability, the proximity to those who are printing and distributing money. Are you a recipient of that? For example, a lot of the third world is not a recipient of that and is not in good financial situations. And then there's order, political and also social order. So when you could see it differentiated in the countries that are controlling the virus and behaving orderly and well together. So you could see those differentiations reflected in the market's behavior, and you can also see it reflected in the political and social conditions.
Well, we know that markets are discounting mechanisms, Ray. I don't need to tell you interest rates at zero, but I'll remind everybody that stocks keep rising to new records, and not just here in the United States, but globally. PE ratios haven't been this high since the dot-com era. The dollar, to your point about currencies, Ray, has slumped to a 2.5-year low. Do asset prices and valuations make sense given the economic fundamentals, some of which we've talked about here in this panel discussion, and for that matter, the policy outlook and what we can expect from a Biden administration? Ray, what do you think?
You know, when we look at interest rate markets, we look at the earnings yield. When we look at stocks and we look at PEs, they're basically yields. And the capacity of central banks to print money and buy financial assets has essentially led the bond market to go to multiples that are somewhere between 100 times. You know, you put a dollar out and you'll get your money back in 100 years. It's because of the nature of, so it's as a 100-time multiple. You have to compare stock multiples to bond multiples. And so the capacity of central banks to put liquidity into the system and to have that liquidity go to produce high multiples is very real. It also changes the economics of borrowing. In other words, if you can find something that makes anything more than a zero, or they're going to make money. So that encourages the leveraging and the changes. So the financial flows that we're seeing. The market behavior is reflective of that. In my opinion, don't own bonds and don't own cash because they're producing a lot of debt and producing a lot of money to fund it. And so that's changing the nature of capital flows. It's also changing how those flows go to China in terms of the comparison of that market, particularly as it opens up. So I think it's behaving sensibly, but don't use old multiples as reflections of the limitations of what's expensive.
That was Bridgewater Associates founder and co-chairman Ray Dalio speaking to Bloomberg's Eric Schatzker at the New Economy Forum. Coming up on the programme, British Airways and American Airlines will begin to offer virus tests on some of their long-haul flights. This is just a trial. We'll talk about the future of travel next. This is Bloomberg.
We are quite confident in travel recovery for Asia. I think Asia will be in the forefront of the recovery for travel because quite a lot of the markets in Asia are already in green zone. You are already seeing green shoots between Malaysia and Singapore with having the reciprocal green lane. Thailand already opening back to Chinese passengers coming into Thailand in a very cadenced manner. And then Hong Kong and Singapore are also establishing a travel bubble.
Our business back in volume almost to 2019 levels. Varies a little bit by market to market. If you look at Sanya, which you think of as China's Florida, maybe as an example, business is better there now than it was in 2019, and that's because people feel like it's safe to get back on the road. Leisure travel is stronger than business travel, but business travel in group is coming back too.
We have robust demand, and if you look at our bookings, second half of 21 and beyond, they're in the range of they would be pre-COVID. And we're not having the discount prices or anything. So people, keep in mind, while we impact millions of jobs, and while there's almost 500 million people a year that take holidays, only about 30 million can go on cruise ships. And unlike my colleagues here on the panel, we sail full. We don't have vacancies.
Some of the biggest names there in the travel sector speaking about the future of the industry at Bloomberg's New Economy Forum. Let's stick with the theme of travel. Joining us now is Celine Fornaro, UBS Head of European Industrial Equity Research. Celine, really good to speak to you this morning. So we heard some voices there about the issues that the sector faces right now. When you look at the way that businesses have adopted to working from home and conference software being used instead of travel, do you expect the size of the travel market to be structurally different on the other side of the pandemic, or do you not?
Good morning. Thank you for having me. Yes, I think the pandemic will have an impact. However, it will depend on the segments, right? So one thing is business travel, and I'll go back at that. But I think most importantly, if you look at leisure travel, I don't think very much will have changed in people's behavior. And if anything, we're likely to see a super cycle from that perspective for next summer onwards. Of course, you need a few things to happen, wider use of the vaccine, more quick testing that we're starting to see. Even British Airways, they announced that yesterday. But then we really see that leisure traffic will come back strongly. Business travel, I would say, is slightly different. Business travel always gets affected after a downturn, even after the global financial crisis. For British Airways, business travel was down 30%. So we see right now structurally business travel to be down around 20 to 25%. But I think really the good news is on the super cycle, potentially on the leisure market.
And how quickly do you think the leisure market can come back then, Celine, when we look at this news from BA and American about the pilot they want to run on some of their long-haul flights? You test a few days before you travel, then you test a few days afterwards. It's paid for by the airlines, and they want to run this to see whether it can work, can drive up demand in the leisure sector. How much can that do as we wait for the vaccinations to really kick in?
I think we've got many examples globally, and some of the voices before were mentioning that. In Asia, we have a lot of regions where domestic travel is actually back to pre-COVID levels. We also have Russia, which is showing really good progress. And then we're starting to monitor very closely the US market, where as well there's been really good, steady progress on the domestic market. I think the initiatives on testing, they may feel a little bit, starting here in Europe, but we see in Asia, for example, in Singapore, they're rolling out a PCR test to be done in 1.5 hours. So the PCR test is really the one that still takes 1 or 2 days at the airport from January onwards. So this is really important, I think, to convey confidence back to business travel, but also the leisure travel. In terms of the domestic recovery, we see really strong progress on the narrow body cycle, so the medium-sized planes, and we've got the production at the big OEMs, Airbus and Boeing, going back to I would say 19 levels or 19 levels for Airbus in 2023. So it's actually a faster cycle than the long-haul travel.
How much can the cycle of renewal of aircraft associated with greener and greener technologies, how much can that support any short-term weakness in the industry, Celine? Because we're seeing airlines furloughing their aircraft much more quickly, perhaps, than they did in the past. I mean, how old are aircraft allowed to get these days?
Yes, that's a very good question. And I think it's very topical because it's a link between an economic downturn and the green agenda. And I think this is the opportunity in a way that COVID gives to airline and to the industry in terms of tackling the green agenda on a short-term basis. And when you look the retirements, we basically expect some of the large wide bodies have already been announced, the 747s and all these iconic planes. And these are probably, more than 20 years old on average. But we've also could see planes around 18 years old being grounded. And if you look, you used to fly planes up until 25 years old before. And I think in the wide body, this retirement factor is going to be more pronounced. And if you think about emissions, wide body and long haul this is where you have, more emissions on a trip basis. And so that would also be, factor for the green agenda.
How is the green agenda showing up in consumer behaviour, Celine? Clearly, everything's been disrupted this year, but when we look ahead to 2021 and the summer, would we expect Europeans to jump on leisure travel with great enthusiasm, despite concerns around climate? And crucially, how are attitudes evolving in Asia, where fast growth of those economies has led, of course, to fast growth of leisure traffic?
I would point to two surveys that have been done during COVID and towards the latter part of the year. One is we've done it at UBS, where we don't see more increased concern from leisure passengers in terms of reducing or starting to reduce the air travel for carbon-related reasons. So it hasn't really changed in 2020 versus 2019. Also, the European Commission runs an extended survey across, hundreds of thousands of people in Europe. And you see that the European people or population concern on environment has come down more like a fifth position in terms of topics, whereas before it was really in the top three. So maybe that is a little bit on the back burner a little bit for next year, whilst people enjoy their holiday, a short-term hop here and there. And in the meantime, as I said, I think the industry is really tackling the agenda at the, really on an active basis. Short-term, medium-term, and long-term solutions have now been presented.
Celine, thank you so much for joining us. Celine Fornaro, UBS Head of European Industrials Equity Research. Thank you very much to Celine for her time this morning. Big topic of conversation, the aviation sector, how it copes and how it bounces back. Let's get a Bloomberg Business Flash then. Some of the big top corporate stories we're covering here at Bloomberg today. Goldman Sachs is planning a new round of job cuts. It's the second time in just 3 months after it held off during the early stages of the pandemic. In September, it started cutting roughly 400 positions. This time isn't expected to be as many, but executives anticipate more layoffs in the coming year. Now, the biggest takeover of a UK company this year, Canada's Intact Financial is buying RSA Insurance. It's teaming up with a Danish insurer on the £7.2 billion deal. RSA is set to be broken up, with Intact keeping its UK, Canadian and international operations. Elon Musk is now the third richest person in the world. He's passed Mark Zuckerberg with a net worth of about $110 billion. And over $80 billion of that is from this year alone. The value of his electric car firm Tesla has skyrocketed and is continuing its rally after being named for inclusion in the S&P 500. That is your Bloomberg Business Flash. Let's take a look at some of the movers. Software AG is one of the stocks on the move this morning, boosting guidance for 2020 for the 2020 financial year. The RSA deal, also worth noting, Intact Financial buying the company in this year's biggest UK takeover, and Maersk also on the move, launching a $1.6 billion buyback, talking to me earlier on about normalization. This is Bloomberg.
our vision is to be the best open financial services platform on the market. And what we want to make sure is that the structural changes that we have made, I described before, which is the One Santander, the global digital bank, and our payments platform, will help us drive greater and profitable, sustainable growth. So no, we're not about to participate in any, let's say, traditional bank consolidation. We don't believe that is the right thing for us at the moment.
That was Santander Executive Chairman Ana Botín speaking amid a boom in takeover activity in the Spanish banking sector. Let's talk about a different sector, the auto sector. Sales of new cars and vans powered wholly by petrol and diesel will be banned in the UK from 2030. This is part of what Prime Minister Boris Johnson calls a green industrial revolution to tackle climate change. The UK government says it will invest in electric vehicles, renewable energy and measures to make homes more energy efficient. Let's get the take now of the Society of Motor Manufacturers and Traders. I'm pleased to say Mike Hawes, who's the CEO of the SMMT, joins us now. Mike, good to speak to you. You said this morning in a statement that this throws up immense challenges, although you welcome some of what the government is doing here. Immense challenges. What is the biggest challenge for your sector?
Well, put simply, at the moment, about 5% of new car sales are pure electric battery or a handful of hydrogen. We've got to go from 5% to 100% effectively in 10 years. I mean, considering we've spent the last 100 years predominantly making petrol and diesel engines, that shift is major. And you know, the big challenge will be making sure the consumer can take up these vehicles, which means making them affordable.
Yeah, it seems they need to be affordable and they need to be easy to charge, Mike. So on those subjects, in terms of affordability, last time I was in a car showroom, it seemed that the differential pricing was there to incentivize you to buy the old technology to get that off their parking lot rather than the new technology. How do we bring the price of the new stuff down?
Well, invariably, when you're looking at new technology is always more expensive than the technology it replaces. You know, we're an industry that's high volume, small margin, so it's all about scale. So, you know, as I said, you know, if we're about 5% of new car sales being electric, that's got to increase significantly. Yes, we need to get the price of batteries down, and that will, to a certain extent, depend on supply and demand will go up. Can we make sure we can access the raw materials? We are looking, obviously, to the government support to assist this transition, because not only does that help make these cars more affordable, it sends the right signal to customers that these are the types of vehicles, the types of technology we want customers to buy. And, you know, we've got a start on that matter, but it's like everywhere else in the world, everyone is clamoring for these vehicles. We've got to get as many as possible here into the UK.
Yes, so to take plug-in hybrids and electrics, there's such a tiny proportion, as you've already told us, Mike, and to make them a bigger part of the sales mix, what do you need to see from government? I suppose charging is very much at the heart of that conversation.
Absolutely. All the conversations we have with drivers, with customers, what they're concerned about is availability of charging. They're used to just going into a petrol station, not having to worry about it, and refuel 2 or 3 minutes, where you go another 400 miles. Batteries at the moment don't give you 400 miles, so you need to have a slightly different mindset about the range of driving you're going to do. But most people only do about 250 miles a week and maybe 25 miles a day, so this is well within current range. What we need is a massive investment in infrastructure, especially in terms of public charging, because about half the dwellings in the UK don't have their own dedicated parking space. If you do, it's relatively straightforward. If you don't, you live in a terraced house, you live in an apartment, where are you going to charge? Can you be sure that's available? Can you be sure it's working? And is that affordable? Invariably, we look at the cost of running these vehicles, and they are cheaper, but we need to make sure that they continue to be so, and that the access to the charging infrastructure is there, so you don't even have to think about it.
Yes, and if you are going to be charging away from the home, how quick will it be? That's also part of the conversation, isn't it? In terms of the cost of manufacture, Mike, just briefly, what will it cost the car makers to phase out gasoline and diesel cars?
Well, you're trying to build that into your business planning. As we said, at the moment, battery electric vehicles are more expensive to make. We've got to get that down at least to parity. So we need to drive down the price of batteries. Essentially, a lot of the other running train is the same there, because essentially you're replacing a petrol diesel engine with batteries and electric motors. So there is still basic costs that won't come down because other than the ongoing attempts for cost reduction. The big challenge, as I said, is especially in the production, and battery production here in the UK is what we need.
Mike, thanks so much for joining us. Mike Hawes, the CEO of the Society of Motor Manufacturers and Traders. Thank you very much for joining us. European equity markets then trade just fairly flat this morning. This is Bloomberg.
Staying the course, ECB President Christine Lagarde tells us good news on a vaccine is not a game changer for its forecasts. Grim statistics, NY hospitalizations reached the highest level since June. The Fed Chair Jay Powell calls rising infection rates a significant downside risk. And Judy Shelton's nomination to the board of the Fed is blocked in the Senate. It's a setback for President Trump's drive to shake up the central bank before he leaves office. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, there's a lot going on in the markets. Of course, a lot of the focus on U.S. politics, a lot of the focus also on central banks here. We seem to be inching closer to a deal over between the U.K. and the EU. That's filtering a little bit through in terms of optimism on pound. And the other thing I'm watching is Bitcoin. Yes, I don't look at Bitcoin very often, but actually Bitcoin is definitely something that we need to watch out for because it's always been there, but really yesterday was a huge rise beyond 17,000, and then, you know, it's a pretty parabolic ascent, surging past 18,000 for the first time since December 2017. Now, the mania in cryptocurrency, a lot of people are saying, has reached a fever pitch following this wider embrace from Wall Street linchpins, including Fidelity Investments. European stocks overall unchanged, slipping a touch just moments ago, again on these new virus cases as they continue to mount, and that's worrying investors across the world. Now let's get straight to the Bloomberg First Word News. In London with me is Leanne Gerrans. Hi, Leanne.
Good morning, Francine. The Senate has blocked the nomination of Judy Shelton to the Federal Reserve Board. It's a setback for Majority Leader Mitch McConnell and President Trump. With two senators in quarantine, the Republicans fell short of the votes needed. The Senate can reconsider her nomination, but time is now running out. President Trump has fired his cybersecurity chief after he contradicted claims of widespread election fraud. His agency declared the vote the most secure in American history. The move had been widely expected and comes amid a purge of senior officials by the Trump administration. Here in the UK, it's announcing a £12 billion plan to boost green industries and tackle climate change. In a blueprint, Prime Minister Boris Johnson says the move will create more support, as many as 250,000 jobs too. Sales of new petrol and diesel cars will be banned from 2030, and the government will invest in electric vehicles and renewable energy. And three former lawmakers in Hong Kong have been arrested over a scuffle in the Legislative Council chamber earlier this year. They've been detained for allegedly trying to disrupt a vote banning criticism of the Chinese national anthem. The arrests are the latest blow to Hong Kong's democracy movement after the passing of a sweeping security law, which happened back in June. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, the news of a vaccine does not really change the ECB's plans to add monetary stimulus or to adopt monetary stimulus. That's according to President Christine Lagarde speaking to us at the New Economy Forum. Lagarde said the central bank is focused on stopping the current economic slump from getting worse and always assuming a medical solution would be available in 2021.
I'm not sure that is going to be a major game changer for our forecast, simply because what we had anticipated in our baseline was that at some stage in the first half of 2021, there would be a vaccine and that it would be rolled out in the course of 2021. So it might be a little bit accelerated given the news that we're receiving from the various horizons, Germany, US. But I don't think that is going to be a game changer, so to speak. I think that our forecast is being revisited almost as we speak, and we will be releasing on the 10th of December. So I don't want to anticipate what the outcome will be. But, you know, we've seen, before we had this great news about vaccines, we had some pretty negative news concerning the second wave that really came about certainly earlier than anything we had anticipated. And together with that second wave, we have also that list of containment measures and lockdown measures that have affected one country after the other in the euro area. So we had a combination of those sort of developments that affected negatively the situation, and that also has an impact on the outlook.
So what kind of economy do you see for Europe and the world because of the extra restrictions? Is it, you know, a double dip? Is it something that is so uncertain at the moment because even if we get a vaccine, we don't exactly know what shape it will take or how consumers will behave?
You know, I don't want to downplay the very good news that the vaccines were. But I think that, you know, as a central bank, we have to be mindful of not just the short term and the news impact. We have to be mindful of the overall situation. And in that vein, I think that the second wave that we saw presents risks. The first risk that I would think of is the fact that consumers, investors, employers do not regard the pandemic as a one-off this V shape that we all aspired to, but as something that will recur over the course of time, and as a result would lead them to completely change their behavior. In other words, how about if they start saving again for precautionary purposes? How about if they continue to freeze and hold their investment plans because of the uncertainty generated by this situation? And the second risk that I see is the potential real/financial spillover, which we have managed to avoid so far. So in other words, we have not had the financial sector amplifying the downside that has weighed on the real economy. And we need to really stay clear of that, because that would be an aggravating factor.
What surprised you the most in the economy in Europe, but also worldwide, given the pandemic? Is it wages? Is it productivity? Is it how quickly people actually started working again when some of these lockdowns were lifted?
You know, what surprised me most from this part of the world where I have relocated is, how in the face of this massive exogenous symmetric shock, all European players, upped their game. And I think that we were first out of the gate, putting together a very large package in the first half of March. And we were soon followed by the European Commission, the decision to apply the escape clause, the decision to remove the state aid restrictions, the decision then to put on the table a massive package that was agreed in July. That surprised me.
Well, that was the ECB President, Christine Lagarde, speaking to us yesterday. Now let's get more, of course, on monetary policy, on the economy, and on COVID-19 with our next guest. He's one of the most well-respected, of course, in private banking. Joining us today is Patrick Audier. He's Senior Managing Partner at the Swiss private bank Lombard Odier. Patrick, thank you so much for joining us. We haven't spoken in a while, and I think you've probably been busy with dealing with the pandemic, looking at what clients wanted and things like that. How's it all been going? Are markets too optimistic that we're over the worst for the pandemic?
Francine, I think there's a need not to be too exuberant about the good news that seemed to appear at the end of this unprecedented year. I think in general, investors and clients have been very disciplined. They've been avoiding panicking, and they've been listening to advices of advisors such as ourselves and others. And I think this has been good indeed, as Christine Lagarde was saying, for the financial markets that did recover quite sharply, as you know. So I think what's happening now is basically a number of these uncertainties that have characterized last year or the last few months are sort of fading out. And now we have to adjust. So the scenario for the next 12 to 18 months is of critical importance. In our case, what we're looking at is basically that the sharp recovery is going to fade out, and that we are probably going to reach the optimal level of activities, at least in the US, towards the end of this year, and probably next year, and probably early 2022 in Europe. But the big question will be thereafter. So we have to adjust portfolios, and clients are listening to that.
So what are clients actually asking of you now? Are they ready to do more deals? Do they want to be more invested? What are some of their concerns going forward?
Well, first of all, they want to make sure that the recovery that they benefited from by staying invested, as we and many have advised during that crisis, looking at this crisis as being a type of a V-shaped scenario, I think they want to make sure that, one, they can benefit from this positioning, and second, that they can adjust for the next cycle. So I think there's a little bit of a rotation in terms of sectors, and of course more sensitivity towards business-sensitive stocks today, but there's also a bit of a rotation with regard to the fixed income allocation, and perhaps also the protection you can put in portfolios. They're asking indeed for protection, and traditionally it's been asset allocation towards, for instance, gold, but it's also been, of course, using some of the derivative markets to protect a little bit more the portfolio allocation. So both, they ask for a balance rather than too invested risk, and some, of course, a proactive rotation of the invested positions being invested in risky assets, remaining investments, of course, in the current cycle.
Patrick, how much more of this rotation do you think we have left? How far can it go?
Well, you know, there's also a strong interest for what we perceive is a fundamental change of paradigm today, in particular with regard to the way industries have to adjust to the current economic model. And we'll probably be able to discuss that a bit later, but I think that the rotation goes in line with also this paradigm change, looking for opportunities of companies transitioning from one economic model to another. I'm thinking about carbon transition, but also of other aspects such as nature investments, trying to make good use of those changes is, of course, offering a lot of opportunities and perhaps making the trend much longer than we would perceive in other traditional types of circumstances.
Patrick, thanks so much. We'll actually come back and speak a lot more about sustainability and maybe this rotation towards more green investments. Patrick Audier there from Lombard Odier stays with us. Now, coming up, much more, of course, from the Bloomberg New Economy Forum, including the chief executive of HSBC and Unilever. Those are coming up shortly, and this is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, a lot going on, of course, in the climate change space. Going green, the UK Prime Minister Boris Johnson had announced a £12 billion plan to boost green industries and tackle climate change. Now, he says the 10-point plan, which includes banning the sale of new gas and diesel cars from 2030, will create and support as many as 250,000 jobs. And this week, Lombard Odier has also launched its natural capital strategy. It's targeting investment opportunities in sustainable resources and focusing on bioenergy and regenerative farming. So let's get back to Patrick Audier from Lombard Odier. Patrick, thank you so much, first of all, for sticking around. We were talking a little bit about the sustainability and the appetite from investors to just go green. How much are you expecting that trend to continue and solidify in the next 18 months?
Perhaps to put it in perspective, Francine, 5 years ago, we had barely 3 to 5% of our request for proposal that did contain any questions, serious questions relative to our taking into consideration sustainability factors. Today, there's barely 1% of total requests or overall requests that is not asking any question in this respect. So it's a trend that is accelerating. I would say that the COVID crisis has probably also accelerated the perception by investors on how important it is to understand what is really happening in the world, what is happening in our economic model, and what does have as an influence on the business models and the choices of assets you can have in portfolios. So of course it is about climate transition, of course it is about health, of course it is about nature, but it's also about social issues. And I think we at Bombardier have started 25 years ago to look at it, so we're well positioned, and that's why we launched what I think is the first of its kind new investment strategy in nature capital, which is basically providing investors with opportunities to both harness and preserve nature at the same time, nature being at the origin of more than half of what is produced in the world today.
But what will be the biggest change for financial markets? Will it be mandatory disclosures of course, carbon emissions and green initiatives? Is that going to happen? Is it taxonomy, or is it something else? Is it just putting a price on carbon?
Well, actually, if it were to put a price on carbon, I think many of us would be very happy, because this is, as with nature, carbon is one of these assets that has a value. Actually, in this case, could be negative, as nature has a positive value, but has no price. And it is absolutely not tolerable anymore to think that we, with the intelligence, collective intelligence that we have in the financial markets, and with regard to our ability to talk to politicians and regulators, that we cannot come to an agreement about that. That's one aspect. We need more of this consultation towards pricing externalities, positive or negative, into the production processes. The second aspect, which is now, of course, changing, is that companies have noted that capital is going to have an influence on their future well-being, i.e. the cost of capital will be sharply influenced by the way companies do integrate those sustainability factors into their strategy. So we are, as many others, but we at Bombardier are looking at it now very seriously to make sure that the portfolios that we do recommend to our clients are completely compliant with this approach. And actually, at Bombardier, there should be no other way to invest as being compliant in sustainability-driven types of strategies.
Patrick, where does a lot of this appetite come from? Is it millennials, or is it really across the board that most of your clients think like this?
No, I think the appetite comes from actually, first, the sense of responsibility of some of the financial sector actors that recognize that their fiduciary responsibility has to do with making sure they understand, analyze, and conclude on what is the impact of those transformations. I mean, they are massive. And the degree of damages created by our today's economic model can be turned into fantastic opportunities. Actually, we believe that sustainability trends will be at the origin of the most important portfolio returns they could be for the next cycle. And that's basically where it comes first. The second is, of course, coming from a certain demand that is also perhaps linked to the nature of the clientele or the investors. It could be the institutional investment community that sees regulation little by little coming into the disclosure requirements, of course, the taxonomy, and perhaps the metrics that have to be set on the objectives of the portfolios. We, for instance, at Bombardier for Climate Transitions have come up with one of the TCFD recommended 7 measures that are possible, the temperature alignment measures that we have developed. This is a way to tell investors, look, you contribute through your investments to this curve or that elevation of the global temperature. Does that fit or not your objective? And secondly, this does not or does fit the Paris Agreement. So all those metrics and instruments make demand little by little be more concerned about it. That's the risk aspect. But as I said first, I think most of the interest comes from the investment opportunities, both from the transitional sectors that are now moving from what we would call the dirty kind of business model to the clean type of business model, and of identifying new opportunities such as technology-driven types of new companies.
Patrick, we're talking every day about Bitcoin, and certainly for the last 2 days, it's gone now past 18,000, the highest since 2017. What's your take on Bitcoin? How are people using it? And will it really become something that, companies such as yours will get involved with?
If we think that there's a huge change of paradigm in sustainability, I would say there's enough to be interested in that change and understanding exactly how we can take advantage of it, making sure we avoid all the pitfalls and the risks, as I said. There's enough to do in order to perhaps avoid going into more speculative type of asset classes, such as what Bitcoin could be. My take on the Bitcoin is that it's probably going to be interesting for more speculative investors, but it has no value preservation or asset preservation value for me. It is a limited quantity type of assets that will go up when demand goes up and go down when supply goes up. And I think in this respect, it does not belong to what I would call a very safe and balanced investment strategy today. It's more of a specific type of interest that will apply to those kinds of assets. This is to say, Francine, that Bitcoins perhaps may not belong to those strategies, but it doesn't mean that, of course, cryptocurrencies will not exist and become of essence in portfolios as well. But that's a totally different asset.
Yeah, we'll have to get you back on to talk about that extensively. Thank you so much. Patrick Audier, their Senior Managing Partner at Lombard Odier. Now, coming up, we'll have plenty more on the markets. We also have plenty more from the Bloomberg New Economy Forum, including chief executives of HSBC and Unilever. We'll talk about banking and green consumers. This is Bloomberg.
In my opinion, don't own bonds and don't own cash. because they're producing a lot of debt and producing a lot of money to fund it. And so that's changing the nature of capital flows. It's also changing how those flows go to China in terms of the comparison of that market, particularly as it opens up. So I think it's behaving sensibly, but don't use old multiples as reflections of the limitations of what's expensive.
That was Ray Dalio, founder and co-chairman of Bridgewater Associates, speaking to Bloomberg at the New Economy Forum. So we'll have plenty more, of course, on the New Economy Forum. The markets actually kind of moving sideways. A lot of the focus is not only on the number of cases rising, but on possible stimulus. Coming up, we talk about the S&P and Tesla. This is Bloomberg. Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Welcome to Bloomberg ETF IQ Europe. I'm Francine Lackwin. Over the next 30 minutes, we'll be your guide to the region's thriving market in exchange-traded funds. Everything you need to know about the funds and the flows. Shot in the arm, stock ETFs listed in Europe have already had their best month of inflow since January on hopes of a post-COVID return to normality. Equities could overtake fixed income by the year-end. Ethical investing for universities and their multi-billion-pound endowments, while we speak to asset manager Amundi as they launch a carbon-free global equity fund. And it's the biggest company ever to be added to the S&P 500, but plugging in Tesla is causing $400 billion headache for index tracking funds. We'll bring you the story. Well, first up, let's discuss some of the week's flows, buoyed by news of 2 coronavirus vaccines. Europe-listed equity ETFs are on course for their best month since January. Stock funds have seen more than $5.7 billion pour in over just 2.5 weeks. Now, that compares with $1 billion of inflows for fixed income. According to Bloomberg Intelligence, seasonal momentum could push equities ahead of bonds for the year as a whole. Well, joining us today is Michael John Lytle. He is Chief Executive and founder of Tabula. Thank you so much for joining us. MJ, what's your take overall about the direction of ETFs from now until the end of the year?
Well, thank you, Francine. There's no question that equity flows are catching up with fixed income, but we have to put this in perspective. Over the sell-off in March and April, both markets saw 15 to 20 billion of outflows. Fixed income within weeks started to see inflows and has outpaced equity inflows throughout this year until today. Equity inflows didn't really restart until June, so there was a 2-month gap between April and June for fixed income and equity. Equity is catching up and now matching fixed income, but remember, historically, we had double the inflow into equities of fixed income. So to match past flows, you would actually have to see equities make a massive gain over the next month.
Jay, I mean, could we see those massive gains? And if, we don't, what could be the catalyst if it were to happen?
Anything could happen, but, here we are on November 18th. We've got about a month until markets start to close down, people close up their books. I'm not sure there's the risk appetite for people to significantly increase their equity positions. In general, I would say people are looking at the year end and starting to worry about year end liquidity, starting to think about how to protect any gains that they do have in their portfolios. I think in general, we're going to see people repositioning between their various risk positions, but highly unlikely at these levels, which are elevated. Remember, we are at levels both in the fixed income and equity markets, which are beyond where they were before the sell-off in March. And so people are already pretty heady in their expectations of where the markets are and where value is. So I think I think the market in general will be surprised if there were another massive inflow into risk assets.
MJ, I don't know what you make of Bitcoin, or if there's a way to trade Bitcoin through ETFs. I mean, what's the impact on certain ETF markets in Europe because of the rise of Bitcoin?
Well, I think Bitcoin is interesting, but it's interesting in what it says about the need for cryptocurrencies. I think the much more interesting story is going to be what the central banks do around introducing central bank digital currencies. That's really where the story is. The use of blockchain technology by central banks to create electronic versions of their own currencies is going to produce a much bigger impact on how people use currency going forward than I think the private sector solutions in the digital currency space. We've already seen China, for example, kicking off a project to create their own digital currency for the renminbi.
Do you worry about liquidity in ETFs, and what kind of trend will that actually put? Is it liquidity, for example, in cash bonds that can no longer be assured?
Liquidity in ETFs, basically, as we know, comes from two different things. There's the secondary market liquidity for the ETFs themselves, and then there's the primary liquidity, the ability to create new ETFs, to pass through the liquidity of the underlying assets that the ETFs track to the end investor. What's most important to underpin liquidity is what actually goes on in the primary markets, and that means how liquid are the assets held by the ETFs themselves. This is something that has caused concern over time with fixed income assets. Obviously, fixed income assets are not liquid in the same way that equities are. It's partially because the fixed income asset class is far more diverse, has a far larger number of securities. Remember, there are about 70,000 listed equities. There are 9 million fixed income securities. And this is an OTC traded market as opposed to on exchange. Having said all that, the fixed income ETFs performed extraordinarily well through the crisis. ETFs showed that actually they were a source of liquidity and access when the market sold off. So I don't think there are any concerns about the liquidity that you can achieve in the fixed income markets if there is another sell-off or into the year end. And actually, I think most people see ETFs in the fixed income space as providing greater liquidity rather than drawing down liquidity.
All right, thank you so much. MJ Lytle there from Tabula stays with us. Now, coming up, we'll have plenty more on ESG. How do universities also ensure their multi-billion-pound endowment funds are ethically invested? We speak to asset manager Amundi, who today are launching a carbon-free global equity fund. That's coming up next with our Danny Berger, and this is Bloomberg. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacqua. Now, ESG funds have been one of the biggest growth areas for retail investors in 2020. But how can universities ensure that their endowment funds are invested ethically? Well, to address the change, asset manager Amundi, working with colleges from Cambridge and Oxford universities, are today launching a carbon-free global equity fund. And our Danny Berger is at Amundi with an exclusive interview. Over to you, Danny.
Thanks, Francine. I'm really excited to bring this story exclusively to our viewers. One of the first times these two prestigious UK universities are endorsing such a passive tracking green fund. And joining me to discuss is Ashley Fagan, head of ETF indexing and smart beta strategic clients at Amundi. Ashley, first off, thank you so much for joining. So looking at some of the specifics of this fund, so it's going to replicate the MSCI All Country World Index, strip out any fossil fuels as well as any controversies seeded by Clare College at Cambridge University. So what was the thought process behind having this track the performance of the All Country World Index versus just a pure exposure to green companies?
Hi, Danny. Yeah, we're really excited about this fund launch today and being able to partner with such world-renowned institutions. This fund will address the financial risk of climate change, and it goes a step further compared to most products that are available out there today in terms of completely removing the energy sector. Thus, it addresses the risk of both stranded assets as well as companies that have direct economic exposure to fossil fuels. So using an index tracker fund was a way that the college endowments at Cambridge and Oxford were able to address the specific requirements and objectives around ESG that they wanted to integrate.
So it sounds that this will then replace the equity exposure as a whole, that this will be sort of the new core exposure. Is the idea then that this would outperform over time versus just a plain vanilla equity fund?
Yeah, I think it's a really interesting point that you bring there in terms of we're really seeing ESG become mainstream. It's replacing the core of portfolios now. It's not just, niche thematic sitting in a very specific ethical portfolio. So indeed, these clients are looking to replace their equity portfolios and move to this low carbon solution to address all the financial risks that we discussed in terms of climate change and these exposures that over the long term can have an impact on performance, as you say.
So an impact on performance, but what about an impact on the company itself? Because this is a passive fund, were there any concerns from these endowments that they maybe couldn't have as active of a discussion with the companies or an impact when it comes to sustainability?
Yeah, it's a really, really common misconception that we get that if you're investing passively, can you have an active approach in terms of voting and engagement and influence with companies? And in fact, it is not true at all in terms of active stewardship. It's not passive or active. So at Amundi, for example, we have a very active voting and engagement policy that applies to all the portfolios, regardless of whether they're managed in a passive or active way. And actually, if you look at the amount of index assets managed globally, this has the power to be a very, very large voice and have a really big impact overall.
So have these endowments asked you then on their behalf to be more active with these companies to promote those sorts of things?
We already have a very active voting and engagement policy, but we are looking to collaborate and, for example, the universities do a lot of research in this area, and I think there is an opportunity for us to really partner and look at best practices in terms of engagement and voting with companies.
So iShares also launched a somewhat similar product last week for Oxford's endowment as well. Is this a space that you're seeing a lot of competition? How hot is this sort of arms race now for endowment assets?
It's a really good question as well in terms of, absolutely, it's been a remarkable year in terms of new product launches, especially on the ESG side. We see a lot of growth in passive. We really welcome competition, and it's being driven by demand and by innovation. So these are things that are really positive developments for everyone.
So what's the thought then in getting beyond endowment money for this? It was seeded by one of the college endowments. What's your plan for attracting other institutions to this fund?
I think the really important thing about ESG, there's two things. One is we're really in the middle of an ESG revolution, and Europe has been a leader when it comes to ESG. So at Amundi, we've been one of the first companies to really take responsible investing seriously, and we developed the first low-carbon indices back in 2014. Those are available in ETFs, so anybody, all types of investors can buy them. But it's really important that with ESG, it's not a one-size-fits-all approach. So you have off-the-shelf, ready to buy ETFs in ESGs across different intensities. You have climate ETFs and index funds available for investors, but you also have the opportunity where some sophisticated investors may want to incorporate really, really specific ESG requirements or objectives, like in this case, where we're completely excluding the energy sector, in addition to many other factors. And that nature allows us to, work with those kind of clients to develop more customized solutions as well.
So more customized solutions, and you mentioned the off-the-shelf as well, but certainly there are already a lot of strategies out there. ESG is so popular, especially here in Europe. What do you see as left? Where are the gaps that you would like to fill in terms of building out new products for Amundi?
I see there's really three main areas where there's still space for future development in this area. One is around more granular exposures. So if you look at the broad indices, MSCI World, MSCI Europe, of course, there are a lot of ESG products already available off the shelf, as you say. However, if you look at things like single country ETFs, there's less availability in terms of those products. For example, we've just launched a UK SRIX fossil fuel ETF. I think we'll still continue to see more of these types of products launched because as asset allocators look to replace their core portfolios with ESG building blocks, they need these exposures as well as the larger indices. There's also fixed income. So this year has been a huge year for equity ESG, but I really believe that fixed income will be the next big transition. And the third area is around thematics in ESG. So there's still a lot of innovation in the space. There's a lot of active funds, but but there's not that many actually thematic ESG ETFs. And I believe the climate theme will be a big topic as well going forward.
So with these asset managers who you've had these conversations with, be it thematic or fixed income, have you had a lot of people come to you looking at seeding more funds like you've done with Cambridge?
Yes, absolutely. So the demand both for the existing product range, which we've extended and is available all across in terms of if you look at the broader ETF range, there's a lot of different, let's say, flavors of ESG or ESG intensities that are available to suit all kinds of investor needs. Right. But as mentioned, you do have more, because of this, it can be quite a complex topic when you look at things like maybe improving specific carbon emissions or very, very specific exclusions that investors might have demand for. So from that perspective, we are having a lot of conversations with investors around developing bespoke solutions as well.
Right. Well, Ashley, I'm afraid we're going to have to leave it there. Thank you so much for joining us. That's Ashley Fagan, head of ETF Smart Beta and Indexing Strategic Clients. Fran, it sounds like we can expect more of these types of ETFs to come and more institutions looking to seed them.
Danny, thank you so much. Danny Berger there with a great conversation at Amundi. Now, coming up, it's the biggest company ever to be added to the S&P 500, but plugging in Tesla to the U.S. benchmark is causing quite a headache for index tracking funds. That story is next, and this is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacqua here in London. Now, there's a lot going on the markets, and this was a big week, certainly, for Tesla. It's the biggest company ever to be added to the S&P 500. But plugging in Tesla, worth more than $400 billion to the U.S. benchmark, is causing quite a headache for index tracking funds. Adding it all at once would mean that they need to sell more than $40 billion of stocks and other constituents to make space. Now let's get more with Sam Potter. He's a senior editor at Bloomberg who oversees our ETF coverage. Sam, great to speak to you. How does an index provider even start to approach an addition of this scale?
Good morning, Francine. Yes, well, what we have here is the financial market equivalent of that old joke, how do you eat an elephant? And the answer is one bite at a time. S&P Dow Jones have tried to be prudent and sensible when it comes to adding Tesla. They have waited until the company fits certain criteria. The problem has been that in that time, Tesla, which was already big, has got even bigger, so big that its impact on the index is going to be huge. It's going to be probably one of the top 10 companies, probably worth more than 1% of S&P 500, probably equivalent to more than 50 or even 60 smaller companies. And so their answer to that is basically they are seeking feedback from the investment world on adding Tesla in stages. Now, they said in their statement, I think 2 stages. We'll have to see how that goes. But basically, even adding it in 2 stages, it's going to be a very big change to the index.
Sam, adjusting the index is one thing. It's also not easy for the funds following the S&P, right?
Yes, absolutely. Well, this is actually the crunch. This is the problem. Adding to an index is really just changing some numbers on a bit of paper. I mean, it is fairly straightforward. There are criteria and it's mathematics and the way it works. The crunch is $11 trillion, something like that, tracking or benchmarked to the S&P 500. Each of those funds, if they're going to add Tesla, they cannot just sell one company. There's no companies that are going to exit the gauge that are big enough to do that. So funds have been planning for this for months. They've been strategizing. It's still not obvious what the solution is. We're going to have to see if Tesla is added in 2 chunks. But as you mentioned in the intro, it's going to be more than $40 billion worth of stocks going to have to be sold, going to change hands just to make room for these.
Sam, thank you so much. Sam Potter there, who leads our, of course, ETF coverage in Europe. Now let's get more thoughts from our guests this morning. We're back with MJ Lytle. MJ, when you look at Tesla, I mean, how much of a headache is this, worldwide? But what does it specifically mean for ETFs in Europe?
Well, inclusion in large cap indices is, and rebalancing them is a little bit arbitrary in the sense that, we have cutoffs. So the S&P 500 has 500 names in it. It has a rebalancing frequency. And so it means that if a company increases in value very significant over in between rebalancings, it can come in as a big chunk. Bringing in Tesla will obviously have a big impact on the overall distribution of the S&P 500, the sectoral distribution, as well as the individual name distribution. On the plus side, the equity markets are very liquid and have tight bid offers. And so although people will talk about the problems of rebalancing, the actual cost of selling one equity and buying another is relatively small. It does, though, continue to highlight the impact of tracking indices that are market cap weighted, that have specific breaking points, and whether these indices are always going to produce the outcome that people expect.
MJ, when you look at some of the things that we're looking at in climate and the Green Plan, the UK this week announcing a pretty sweeping Green New Deal, saying that it will support 250,000 jobs, and they're also banning sales of diesel cars, or at least of gas or fuel cars, from 2030. Is there a read across to ETFs? Are we going to see much more ESG products from the climate space in ETFs flourish?
ESG is the story and will be the story for the next decade in investing, because the financial markets, as the UK government has highlighted, Rishi Sunak has highlighted, are where a lot of the work has to be done in implementing the investment that is required in order to support the government's objectives. There is no question that the flows into ESG this year have been huge. They've been predominantly into equities because fixed income is a laggard. Only 18% has been into fixed income at this stage versus the normal footprint of 30%. It's very interesting, the different dynamics of investing in equity versus fixed income if you want to have an impact in ESG. Equity is very much a buy and influence market because companies are very rarely in the primary markets issuing new equity. So therefore, you need to buy their equities and then vote in the annual meetings. In the fixed income space, companies are in the primary markets on a continuous basis, financing themselves, and therefore you vote with your feet. And if you stop offering money to people in their next bond issue, it will have an immediate effect on their ability to finance themselves and therefore have some pretty big impact on their decisions. So both equity and fixed income investment in companies based on their ESG characteristics is very important. I think that the way you engage is different. But the key is going to be a move from sort of screening approaches to much more impact-focused approaches where you're trying to produce an outcome.
MJ, thanks so much. Michael John Lytle there, Chief Executive and founder of Tabula. Now, that's it for this week's Bloomberg ETF IQ Europe. We'll be back with more next Wednesday, 9:30 a.m. London time. This is Bloomberg. Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. Staying the course, ECB President Christine Lagarde tells us good news on a vaccine is not a game changer for forecasts. Grim statistics and why hospitalizations reached the highest level since June. The Fed Chair, Jay Powell, calls rising infection rates a significant downside risk. And Judy Shelton's nomination to the board of the Fed is blocked in the Senate. It's a setback for President Trump's drive to shake up the central bank before he leaves office. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua in London, Tom Keene in New York. Also, good afternoon if you're watching from Asia, where I know our new economy forum is really taking that part of the world by storm. Tom, the focus, a million things we need to talk about. The UK Green Plan. I know Rupert Harrison will give us a lowdown on whether it will really create jobs and whether the transition to green will be actually painful for this economy. We look at Judy Shelton. We look at Bitcoin having a huge advance. And then I want to ask you about elite kindergartens in New York, because this story by Bloomberg Business Week is really taking everyone by storm.
Oh, they mention all the right schools as well. I think it's true probably in every urban area, but in New York it is. After real estate, it is the focus of New York City, is what to do with the cherubs in the not only the private schools, Francine, but I would also mention the state-of-the-art public schools are, if anything, even more competitive. The schools with a heritage of Stuyvesant or up in Boston Latin, frankly, they're just as hard to get into as the other fancy schools.
Yeah, and we forget, we do spend a lot of time thinking about education for our kids. And, these 4-year-olds actually have to, do tutoring, but also applications and kind of interviews to get into these kindergartens by Zoom. So I find that fascinating. We'll talk a bit about that, and we'll talk about central banks, though, much more. Let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom. President Trump has fired a Homeland Security official who contradicted his unfounded claims about election fraud. Christopher Krebs is a former Microsoft official who the president had named to a top cybersecurity job. In a tweet last night, the president said that Krebs' comments on election security was highly inaccurate. Krebs' agency had called the election the most secure ever. In Michigan, a county that includes Detroit reversed its decision not to certify presidential election results. Earlier, Wayne County's election board caused a national uproar when Republican members blocked certification. State officials have been asked to conduct an audit of some of the country's precincts. Michigan was crucial to Joe Biden's victory. The Senate could still try to reconsider the nomination of Judy Shelton to the Federal Reserve Board, but it's unclear if the result would be any different. Lawmakers handed Senate Majority Leader Mitch McConnell and President Trump a stunning setback by blocking Shelton's nomination. 2 Republican senators were absent because they were quarantined. 2 others voted with Democrats. And in the UK, Boris Johnson is going green. The British Prime Minister announced a $15.9 billion plan to boost green industries and tackle climate change. Sales of new gas and diesel cars will be banned from 2030, and the government will back investment in electric vehicles and green energy. Johnson says the plan will create or support up to 250,000 jobs. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Equities, bonds, currencies, commodities. And, I was asked John Tucker, the great John Tucker, asked me today, what's the single thing out there I see? And the single thing out there I see is a raging battle between the bulls and the bears. It's just that simple here, dashing to December. Futures up 5, Dow level 29,791. The VIX is solid, 22. Can you imagine a 19 VIX? We're not there yet, 22.35. Yields don't tell me anything. Oil with a little bit of an elevation. Brent crude 44.24. I'll let Francine do foreign exchange other than to say renminbi continues to show strong Pacific Rim. Francine?
You know what, Tom? With most markets actually trading a little bit subdued today, the moves in cryptocurrencies really caught my attention. Now, hedge fund titans and celebrities alike are now backing to speculating over Bitcoin's wild ride. I have to say, it could have gotten a bit out of hand. The digital currency more than doubled this year, and you can see Bitcoin surging past 18,000 for the first time since December 2017. Otherwise, I'm looking at dollar weakening a touch, and I'm looking at pound because Rupert Harris is on it, and we'll talk Brexit. So that's always a good thing to look at sterling, 132.89. Now, the former Secretary of State, Hillary Clinton, and MasterCard chief executive are calling for more stimulus as the pandemic threatens hopes for a global recovery. Well, they spoke at the Bloomberg New Economy Forum.
The original stimulus post-COVID was not sufficient. It really did not reach those people, either the employees or the small businesses that were in the greatest need.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
Well, joining us now is Rupert Harrison, BlackRock Multi-Asset Strategy Portfolio Manager. Rupert, first of all, to Tom's good observation that the market seems very binary, right? It either focuses on the vaccine, everything's well, we go back to, the growth that we had in 2019, or it focuses on infections and the medium-term concerns. Like, how do you view the markets as a whole?
Yeah, look, I think that's a very good characterization. I mean, I remain broadly constructive. I think if you look 6 months ahead, this vaccine news is game-changing. It gives us a bridge to somewhere for policy. It means that we can look ahead to renormalization, and I think what will be a very rapid bounce back during next year. But we have an air pocket to get through between now and then, particularly in the US. I'd say in Europe, we have a combination of virus news improving. I think the restrictions that have been put in place in Europe are now working. We've got fiscal support continuing in Europe. In the US, we've got both of those things as a negative. I think we've got escalating virus news, and we're in that kind of upwards phase of the policy response where policymakers are going to have to react, but they haven't yet done enough to get on top of it. And we also have big uncertainty around the sort of air pocket in fiscal support. I think we saw that in yesterday's retail sales disappointment. That was the first month where we've seen incomes falling because policymakers haven't done enough to support incomes. And so this struggle between a positive 6-month view and short-term risks, particularly in the US, is I think what's leading to these sort of directionless markets.
But Rupert, so we did have a number of world leaders and also, businessmen at the New Economy Forum and businesswomen saying that we just need more stimulus, to your point. Is there a danger that we're not going to get stimulus because governments say, well, look, there's a vaccine down the road, it could be 3-4 months away. Why create debt if, the economy can pick up quite quickly after that?
Well, look, that's the danger, but that's exactly the wrong conclusion, right? The actual correct policy conclusion from the vaccine news is we know now that policy is a bridge to somewhere. It's not a bridge to nowhere. We know that these companies are likely to be viable, and therefore the returns to investment now to prevent scarring through bankruptcies and redundancies are that much higher. And any theory that says we're going to have to learn to live with the virus, we've got to let these companies fail, is now much, much harder to sustain. So the returns to policy are higher. The big concern is that the political situation in the US is not going to deliver that policy in time. Now, I suspect that to an extent markets will look through that. I think that on balance, the strong story that we're going to see next year is going to continue to dominate market thinking. I think the big struggle for investors right now is that we saw that vaccine news reflected in some incredible rotations in markets in terms of factor moves, industry moves, individual names. And I think that it's clear now that a lot of that vaccine news is priced. We've seen a big cyclical rotation. We've seen value do well. We've seen momentum sell off. And I think, therefore, to get that kind of further impact of those rotations, we are going to need new news. And I think that could be things like the AstraZeneca vaccine, which is very important for Europe and the UK in terms of capacity and the timescale of rollout, or it's going to be news around policy support.
Dr. Harrison, Tom Keene in New York, good morning to you. I like what BlackRock says, that business cycle analysis here really doesn't work in the midst of a natural disaster such as we have. But does our political cycle analysis work as well?
Well, look, that's a key point that this is not a normal business cycle, right? We are going to see, we've already seen a much more rapid bounce back than expected, and I think we will continue to see that in 2021. The political cycle is the key question. I think in Europe that is less important because I think we have, on the fiscal side, obviously we've had this bump in the road for the European package with the Hungarians and the Polish veto. I think that will get dealt with. But largely, the big fiscal support through things like furlough schemes, part-time work schemes, that is intact, and that is going to last through to the spring when it's needed. The focus really is on the US. Whether we see anything out of the sort of lame duck session of Congress. Obviously, we've got these Georgia runoffs on the 5th of January. I mean, there's an outside chance that the Democrats will end up with a 50-50 Senate, but I don't think anyone is betting big on that. And therefore, the scope for disappointment on the fiscal side in the US is very significant. I think it puts the ball right back in the Fed's court. It means that we're back to a familiar story with split government in the US, where the Fed is really the only game in town.
Steve Englander at Standard Charter publishing they may take action before the December 16th meeting to do what others won't do. What happens, Rupert, if we do not get fiscal stimulus and the Fed feels they need to be patient. I mean, what is the market reaction to no one showing up for this presumed assistance?
Look, I think the market is expects the Fed to do what it takes. I agree, and I think the Fed will deliver on that. If you listen to speeches recently from the chair and the vice chair, they are very clear that they will do what it takes. I think we've had a very, very stark message from the Fed, very clear that they are only looking at inflation. They are not interested in the labor market. They are not interested in growth. If we get strong labor market, they are not going to take that as an excuse to tighten. They are not going to do anything that is going to tighten policy until they see the whites of the eyes of inflation. That's a very, very different regime. But I think that there are limitations to what the Fed can do. They can expand purchases, they can provide guidance. But I think now there's this battle really on spending power between now and, say, Q2 next year. If we think that the economy is really going to be roaring back in Q2, which I think should be the correct expectation, it's about we know that households, for example, actually have pretty good cash positions. Most households have been saving during this period. That might be enough to sort of dampen some of the impact of some of this fall off in fiscal support. And the market looking ahead to Q2 might be enough to sustain this cyclical rally.
I mean, Fran, this is so important that it's not the Powell put or the Bernanke put. Maybe it's the McConnell put, because Senator McConnell knows the Fed will show up. We'll have to see.
Yeah, the Fed, yes, absolutely, Tom. Although we keep on hearing, also from, I think the speech that Christine Lagarde did last week was probably, the envy of a lot of central banks, because she talked about coordination, really like no one else in terms of major central banks have done, almost with, a hint of a threat. It's like, you guys need to show up. Politicians need to show up if you want central banks to do their job. We'll get back to Rupert Harrison there of BlackRock. He stays with us. Now, coming up, we have plenty more from the Bloomberg New Economy Forum. We'll be talking to Geeta Gopinath, IMF Chief Economist, Scott Minerd, Guggenheim Partners Chief Investment Officer, and many more. You can watch it live on Bloomberg.com, on the TV, on the terminal, and all of our social channels. This is Bloomberg.
Better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number, because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
So how many times a day do people ask you when your vaccine is going to be available?
Yes, well, that's definitely a very regular question, whether it's from employees, customers, media, or my mother.
In my opinion, don't own bonds and don't own cash, because they're producing a lot of debt and producing a lot of money to fund it. And so that's changing the nature of capital flows. It's also changing how those flows go to China in terms of the comparison of that market, particularly as it opens up. So I think it's behaving sensibly, but don't use old multiples as reflections of the limitations of what's expensive.
That banner will be interesting. Mr. Dalio, don't own bonds, don't own cash. Well, then what do you own? And that is, of course, a conundrum right now. All of us living at the zero bound. We're going to talk about green here in our next half hour with Rupert Harrison of BlackRock. Important announcements from the United Kingdom. And right now, Rupert, is, multi-asset strategy portfolio manager. Let's go back to square one. What's your asset allocation right now if Dalio says no bonds, no cash?
But I think he's right that bonds are not going to provide the kind of protection and correlations that you used to in a multi-asset portfolio. So we still want to own some bonds. I think that there's still a case for that. I think there's scope for diversifying bond allocations. I think China is an increasingly interesting market for diversification of that bond allocation. But also, I think you want to, continue to look into other diversifiers. We still think precious metals in a sort of QE infinity world are a useful source of ballast in a portfolio. Even if in the short term they're actually trading with a positive beta to equities, we still see them as diversifiers. And then I think you have to build a risk portfolio that reflects, the opportunities in the world. We still see those as enormous. So I still want to be risk on, albeit some of the problems we've just been talking about in the next few months might make for a choppy few months. But when you look 6 to 12 months out, we see a strong recovery in the world. We see enormous opportunities from the kind of growth businesses that have driven opportunities over the last decade or so. We still see opportunities there, but I think there is going to be a sort of continued cyclical recovery in some of the assets that have really, really underperformed for the last few years.
And Rupert,
so there's plenty of opportunities out there.
Yeah, the money question here, Rupert, though, is do you get an absolute or a relative performance away from technology? And that do we go to cyclical and technology drifts to the wayside, or does it come up with
I think you're
cyclical?
still going to get an absolute. To get that kind of cyclical rotation with the market standing still, I think you need to see steeper yield curves, and you need to see that discount rate starting to kind of weigh on long duration assets like growth equities. And I think that in the monetary policy environment we're in, I think it's going to be very, very difficult for yield curves to steepen significantly. I think in the US in particular, you've got a Fed now that is saying they're happy to let break-evens and inflation expectations move up. That's the whole point of what they're trying to achieve. But I don't think they are going to let real yields drift up significantly. They want to keep the foot to the floor here on monetary policy. And so I think that the extent of that damage that can be done to those long duration assets is going to be limited.
Rupert, where do you find protection then against inflation or stuff like that? Do you buy gold? Do you buy Bitcoin? Is there anything else out there?
Well, look, I think we want to be long inflation. I think that's both a tactical view and a kind of longer term view now. I think that there is more uncertainty on the upside to inflation over a sort of 5-year horizon than there has been for a very long time because we're in this new monetary policy regime. So I think we want to have inflation exposures. I think we want to own precious metals. I mean, ex post, gold is actually empirically not a very good hedge against inflation. But in an environment where investors are looking for a broader range of diversification, where people are extrapolating QE forever, they're looking at that kind of whole narrative around expansion of government debt, expansion of central bank balance sheets. I do think precious metals are a useful thing to have in portfolios. And then I think you have to look for, more tactical, dynamic opportunities when it comes to hedging. I think that puts pressure on active managers to find good sources of dynamic asset allocation and good sources of tactical hedging through things like vol markets, for example.
Rupert, thank you so much. Rupert Harrison there, BlackRock Multi-Asset Strategies Portfolio Managers. He stays with us. We'll talk a bit more about the UK. We'll talk about the Green Deal and, of course, Brexit. Coming up, Representative French Hill of Arkansas. We'll ask him about the Republican Party. We'll ask him about, of course, President Trump conceding or not. We'll also ask him about the Senate. That's at 6:30 a.m. in New York. That's 11:30 a.m. in London. And this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news analysis and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This new law that came down from China's National People's Congress Committee ended up leading to the disqualification of 4 pro-democracy lawmakers.
This is probably the very final and complete crackdown.
I hope you understand it is not anything new at all. This was supposed to happen.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Rishika Gupta with your Bloomberg Business Flash. Pfizer's reached a key safety milestone in the study of its experimental coronavirus vaccine. That's according to CEO Albert Bourla. He says the drug maker is now getting ready to seek an emergency use authorization from U.S. regulators. Pfizer previously said the vaccine was more than 90% effective against the virus. Investors have been here before with Bitcoin. The cryptocurrency is quickly approaching the record highs that spurred a mania among buyers almost 3 years ago. That mania ended in a violent crash. The cryptocurrency jumped to well over $18,000 today before falling back some. Bitcoin has more than doubled this year. And in Europe, a recovery in demand for new cars didn't last long. Car sales fell in October by 7.1% after countries started reimposing restrictions to contain the spread of the coronavirus. Other than a small gain in September, European car sales have been in decline all year. They're down 27% through the first 10 months. And that's your Bloomberg Business Flash. Francine, Tom.
Ritika, thanks so much. As Rupert Harrison was talking about optimism on what we do off the pandemic, George Saravelis at Deutsche Bank just publishes a blistering, not note, but paragraph, and he says simply, Europe will boom. That gets your attention as you dash to December. Futures up 9, Dow futures up 98. Yields don't give me a story today. Renminbi 6.5487. Continued Pacific Rim currency strength. Francine?
European stocks are, pretty steady, Tom. They're kind of range-bound, or they're not moving much. They're looking at the rise in virus cases against optimism over a vaccine. And I think, Tom, you're absolutely right. It's kind of a binary outcome right now.
Yes,
Bitcoin
huge.
surging
Well
past
said.
18,000 for the first time since December 2017. Look, it's a cryptocurrency fever. It's definitely making a comeback as Bitcoin
careful.
surges. I think we have to try and figure out the underlying, Tom, always careful, underlying reasons for this.
Right.
Is that diplomatic enough? The pound, Tom, is climbing as the UK and the EU are making progress on a Brexit deal. So we'll speak about that with Rupert Harrison. I know you have big thoughts on Bitcoin, Tom.
Well, Bitcoin, I don't want to go to my thoughts. All I know is if it prints 25,000, Matthew Miller over in Berlin retires. I mean, that's all there is to it. But it's a surge up. There is a linkage supposedly with real yields. We'll see if that holds true. But nevertheless, there is BitDog up, confounding those negative on the currency. I don't know, Francine. I look at the data today, And I really got to go to the persistency of EM strength and currencies across the Pacific Rim doing better. I looked at Thai baht today by chance and really quite strong.
Yeah. Yeah, and we also have to actually look at Peru and a change of leadership there. Now, Bloomberg's New Economy Forum continues today, featuring Noel Quing, HSBC Chief Executive, Alan Jope, Unilever Chief Executive. You can watch it on all of our platforms. This is Bloomberg.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We are quite confident in travel recovery for Asia. I think Asia will be in the forefront of the recovery for travel because quite a lot of the markets in Asia are already in green zone. You are already seeing green shoots between Malaysia and Singapore with having the reciprocal green lane. Thailand already opening back to Chinese passengers coming into Thailand in a very cadenced manner. And then Hong Kong and Singapore are also establishing a travel bubble.
Our business back in volume almost to 2019 levels. Varies a little bit by market to market. If you look at Sanya, which you think of as China's Florida, maybe as an example, business is better there now than it was in 2019, and that's because people feel like it's safe to get back on the road. Leisure travel is stronger than business travel, but business travel and group is coming back too.
We have robust demand, and if you look at our bookings, second half of 21 and beyond, they're in the range of they would be pre-COVID. And we're not having the discount prices or anything. So people, keep in mind, while we impact millions of jobs, and while there's almost 500 million people a year that take holidays, only about 30 million can go on cruise ships. And unlike my colleagues, here on the panel, we sell full. We don't have vacancies.
Well, those were some of the leaders of the travel industry at the Bloomberg New Economy Forum, maintaining a positive outlook for the future of travel, although it's probably post-vaccine. Now, coming up in just a few moments, we'll talk about the UK and this Green New Plan that they've put together. We'll be speaking to the UK Business Minister. He is Nadim Zenawi. Well, let's get back on the UK, the Green Deal, but also the hopes for a Brexit deal. We're back with Rupert Harrison of BlackRock. Rupert, when you look at the UK's push into green financing, they're also hosting, of course, COP26 next year. How much of this is actually a plan for a country post-Brexit, and how much of it is actually the UK just trying to do their part in climate change?
No, I think it's a bit of both. Politically, this is incredibly important for Boris Johnson as a sort of part of the post-Brexit vision. But it is also building on really quite a lot of strength in some areas. So if you look at the UK over the last decade, areas like offshore wind has been an enormous success story for the UK. Green finance, increasingly, the government making a lot of progress on green finance with very encouraging announcements around reporting, green bond issuance and things like that. And actually, if you look in this plan today, there's actually some real substance there. Obviously, there's some things in there that are re-announcements, but there's real substance, and that's because the UK has allocated a very big chunk of capital spending over the next few years to this agenda. So if you look again at the ambitions on things like offshore wind, if you look at the hydrogen economy, which is, I think, a potential area of strength for the UK, if you look at green finance and the potential growth in that, which is obviously a natural area of competitive advantage for the UK, I think there's some real substance here. So, they've got to deliver on it, but the plan contains some real substance.
But what about the carbon market? I mean, this is, the linchpin of any kind of strategy. When will we actually find out what the UK plans to do post-Brexit?
Yeah, that's a very good question, and I understand there is still a big debate in government about whether we are going to go for a trading scheme or whether we're going to move towards carbon taxation, and I think that is still relatively unresolved. I think the important thing is that you still are going to have a government committed to putting a price on carbon, sending a signal towards the low carbon transition. I don't think you are going to see, sometimes you hear as part of the Brexit discussion some fears that the UK is going to enter into some sort of race to the bottom when it comes to environmental regulation. I would expect precisely the reverse. I think the UK is going to try and stand out globally as a leader in the green transition. I think that's an important part of the kind of marketing pitch post-Brexit.
Rupert, what gets my attention here is well-meaning business people, CEOs, and muckety-mucks trotting out the word paradigm. Not to get all Thomas Kuhn on you, but the basic idea is a paradigmatic shift in climate change. Someone's got to pay for it. Who's going to pay for it?
Well, look, it will be paid for, and there are costs, and those costs are going to be borne by a combination of consumers and taxpayers. But those costs are dynamic. I mean, I think offshore wind, for example, is a very good case in point. So when I was in the UK Treasury in the just after 2010, we were putting in a subsidy arrangement for offshore wind that some people said was outrageously expensive relative to the alternatives. But actually, you look at the cost curve in that technology over the last decade. We are now signing offshore wind contracts at prices that are unbelievably low relative to what people expected back a decade ago.
Interesting.
So, and the same is true in solar. A lot of these technologies are now able to compete with carbon sources of energy on a no subsidy basis. So I think this cost situation is a dynamic moving target. I think investors know that as well. I think people increasingly see opportunities in these markets.
Well, this is really, really important. I mean, the technological progress, the engineering, almost in a 19th century sense, is going to outdistance the traditional technologies. Does that mean, as Francine mentions, that the carbon tax debate evaporates?
I think there are still important roles for a carbon tax to play. I think you have to look across the different parts of the economy and see where there are gaps in your pricing. So whether it's, domestic fuel, is it particular industries, high emissions industries that are perhaps not facing the true social cost of what they're producing. So I think there's an important role for the government framework to look across the economy and say, are we providing the right incentives in different bits of the economy, or are there gaps where we're providing the wrong incentives, perhaps where kind of old subsidies for carbon remain? So I think that's an important job. It doesn't have to be a kind of single carbon price. I think there are different frameworks possible for different parts of the economy, but I think there is still a role for that pricing.
Rupert, it's been a busy and big 2 weeks for the Prime Minister. He's still self-isolating after coming into contact with an MP that tested positive for COVID. Everything changed at Downing Street last week with the departure of Dominic Cummings, and another crucial aide to Boris Johnson. And we hear chatter that we're closer to a deal on Brexit. Is this a new Prime Minister?
Well, look, it's the same Prime Minister. I think that I think that you will see a change of tone and a change in approach from Downing Street over the coming months, because I think that sort of particular style of government that people had come to associate with that kind of vote leave mentality and the people from that team is going to change. I think a lot of the substance will remain the same. I think on the Brexit deal, I think that we are still heading for a deal. There is a possibility that the recent events make it a little bit harder for Boris Johnson to justify the kinds of sort of concessions that will be necessary for the final grand bargain on this Brexit deal to come into place. But I think that is still doable. I suspect it will get pushed to the last minute. I don't think we're going to get a deal this week. It may not even be next week.
Rupert, thank you so much, as always. Rupert Harrison there, BlackRock Multi-Asset Strategies Portfolio Manager. Now, let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Homeland Security official Christopher Krebs publicly contradicted President Trump's unfounded claims about widespread election fraud. Last night, those remarks cost him his job. The president tweeted that he had fired Krebs over what he called highly inaccurate comments. Krebs' agency had called the 2020 election the most secure ever. And President Trump may complicate Joe Biden's plans to impose tougher regulations on Wall Street banks. He plans to nominate the acting comptroller of the currency, Brian Brooks, to a 5-year term. If the Senate confirms Brooks, Biden might try to rely on never-used legal authority to try to remove him once he's in the White House. And Republican Senator Charles Grassley missed that crucial vote on Fed nominee Judy Shelton after testing positive for the coronavirus. He began a quarantine yesterday morning. It was the first time Grassley had missed a Senate vote after a record 8,927 votes in a row. Grassley is 87. As president pro tem of the Senate, he is in the line of succession to the presidency after the vice president and the Speaker of the House. The US has okayed the first coronavirus self-testing kit. That's one more tool to battle the pandemic at a time when nationwide testing facilities are being overwhelmed. The testing kit from Lucira Health is currently authorized for prescription use only. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Francine.
Ritika, thanks so much. Futures up 9 right now. Coming up, the United Kingdom business minister and the chemical engineer is more than qualified to speak of the processes, the forward view on climate change. Nadeem Zahawi will join us. This is Bloomberg. Good morning.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We've been shouting from the rooftops for a very long time. There is a monopoly problem in this country, and in particular, there is a Google problem in this country.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Tom Keene in New York. Tom, let's get our central bank fix. The news of a vaccine does not really change the ECB's plans to add monetary stimulus. That's according to Christine Lagarde, speaking to us at the New Economy Forum. She said the central bank had already focused on stopping the current economic slump from getting worse. So that's, of course, something that she kept on saying, but that the assumptions in her forecast were that we would have a vaccine in the next 6 months. Have a listen.
I'm not sure that is going to be a major game changer for our forecast, simply because what we had anticipated in our baseline was that at some stage in the first half of 2021, there would be a vaccine and that it would be rolled out in the course of 2021. So it might be a little bit accelerated given the news that we're receiving from the various horizons, Germany, US. But I don't think that is going to be a game changer, so to speak. I think that our forecast is being revisited almost as we speak, and we will be releasing on the 10th of December. So I don't want to anticipate what the outcome will be. But, we've seen, before we had this great news about vaccines, we had some pretty negative news concerning the second wave that really came about certainly earlier than anything we had anticipated. And together with that second wave, we have also that list of containment measures and lockdown measures that have affected one country after the other in the euro area. So we had a combination of those sort of developments that affected negatively the situation, and that also has an impact on the outlook.
So what kind of economy do you see for Europe and the world? Because of the extra restrictions, is it a double dip? Is it something that is so uncertain at the moment? Because even if we get a vaccine, we don't exactly know what shape it will take or how consumers will behave.
I don't want to downplay the very good news that the vaccines were. But I think that, as a central bank, we have to be mindful of not just the short term and the news impact. We have to be mindful of the overall situation. And in that vein, I think that the second wave that we saw presents risks.
Christine Lagarde with Francine Lacqua here at the New Economy Forum as well. Much more to see here through the week from NEF. On Monday, it is a briefing from the French Minister of Finance and Economy, the wonderful Bruno Le Maire. Look for that, 5:45 a.m. in New York. This is Bloomberg.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
With the Bloomberg Business Flash, I'm Rishka Gupta. The CEO of GlaxoSmithKline says 14 billion doses of a coronavirus vaccine could be needed. That's why she decided to partner with 3 other companies to develop one. Emma Walmsley spoke on the new episode of The David Rubenstein Show.
We have 3 vaccines partnered in the clinic with others, including Sanofi, because that adjuvant technology is proven in pandemic to work on older people and is a more effective way to get to scale manufacturing, which is the other real challenge here. We need to probably provide up to 14 billion doses if we're in 2-dose vaccines to really protect the world. And so, as well as getting to a safe and effective vaccine, we need to get to scale as fast as possible. And our route to that was partnership.
You can watch all of that interview with the GSK CEO Emma Walmsley on The David Rubenstein Show. That's tonight at 9 p.m. in New York and tomorrow at 7 p.m. in Hong Kong and London. And that's your latest Bloomberg Business Flash. Tom Francine.
Rika, thank you so much. Now, the British Prime Minister Boris Johnson has announced a £12 billion plan to boost green industries and tackle climate change. He says the 10-point plan, which included banning the sale of new gas and diesel cars from 2030, will create as many as 250,000 jobs, create or support 250,000 jobs. Well, joining us now is Nadeem Zahawi. He is the UK Business Minister and Conservative MP. Thank you so much, Minister, for joining us. When you look at some of the plans laid out by the Prime Minister, which you're presenting today, how many jobs will be lost in the transition? Do you worry that you don't have the skills so that you need retraining before you support those jobs?
Well, I think you're right to focus on retraining, and the lifetime skills guarantee that Boris announced. It got very few headlines because clearly the whole world is focused on the coronavirus challenge, which the lifetime skills guarantee allows people of any age to reskill, to upskill, and the government will pay for that. So the equivalent of about 4 years of reskilling or upskilling using our further education infrastructure. This announcement today is an additional 250,000 jobs on top of what we currently have, which is about 460,000 jobs in the green sector between now and 2030. So this is the first tranche, I would call it, of getting that additional sort of 2 million jobs in total as we transition to net zero by 2050. So big announcement, £12 billion. You highlighted obviously the banning of petrol and diesel cars, but there's lots more in there on carbon capture, usage and storage in Teesside, in the West Midlands, in Scotland and in Wales as well.
And Business Minister, the one thing that people keep on asking is actually, when will the government make a decision on the future of the carbon market post-Brexit? And actually, will it actually be towards an emission trading system or a carbon tax?
Well, clearly, an emission trading system is something that has, its attractiveness to us, and I think that is something that we are considering. But we're looking at all our options. The energy minister is currently considering what is the right thing to do. We've got a great track record in many ways. If you look at what we've done on hydrogen, and well, we're about to go on hydrogen, but we've done on offshore wind with CFDs, where we are now 36% of the whole of the planet's offshore energy wind generation. In about 15 years, we've been able to achieve that. I think there's a real opportunity for the UK to take real leadership in this, and of course the City of London to do the same thing.
Mr. Zahawi, Tom Keene in New York. You know, in engineering, there's that dreaded course midway through called systems analysis, which is basically game theory for science. Tell me about the adjacency factor here. This is a wonderful program, I get it. But how badly do you need the people across the North Sea and across the English Channel to be with you on this to make it work?
Well, I think it's important that we have partnerships, interconnectors. You're quite right to talk about people across the Channel and across the North Sea as well, which we are very confident in being able to achieve. And also a transition plan. If you look at our assets in the North Sea in oil and gas, they are real opportunities for carbon capture, usage and storage. And so I think with the announcement today, you will see a transition plan for North Sea oil and gas towards this new renewable world that Boris quite rightly wants to champion and lead the world in.
Tell me about the linkage here of federal action, what we'd call it in the United States, a more federal approach, with a Paris Accord idea of states and localities. How do you meld a Boris Johnson plan together with the localism of the Paris Accord?
Well, I think it's incredibly important that we carry with us the devolved administrations, the metro mayors. So if you look at what we're doing in Teesside, Ben Houchen is going to lead the country in many ways. We're going to have 4 hubs for carbon capture, usage and storage, an additional 200 million investment that takes us up to about $1 billion already and counting. Ben Houchen is a metro mayor, a brilliant metro mayor in Teesside, and he sees this as part of his investment in transforming the economy of Teesside. And I think that's really important. The agenda driven by the centre, Whitehall, but actually creating the environment to attract further investment. So the 12 billion that Boris announced today, we believe, as we've done before with the Green Investment Bank, will be matched 3 times. So 36 billion of private sector investment into this green industrial revolution.
Business Minister, I just want to come back to the difference between emissions trading and carbon tax for the carbon market, which is the most important point that people want to know about. Why is there a split between the Business Ministry and Treasury?
I don't think there is. I think it's very important that we work together. My colleague, the Minister for Energy, has been working with Treasury ministers on this, and we will obviously make an announcement appropriately. I was just really making a point that I think emissions trading is an attractive system, and I think we've got to just get this right.
Yeah, talk to me just briefly about nuclear. We keep on hearing from ministers that you're committed to large-scale plants. Where and how many?
So we're committed to large-scale nuclear. The Prime Minister announced today a further 500 million of investment in also developing a first-of-its-kind SMR, so the small modular reactors. We've got already a consortium in the UK that's leading on that. And of course, ultimately, AMRs, the advanced modular reactors, which will come further down the road. This is a very important investment. So large nuclear, small and modular. And ultimately, we've got some fantastic innovation around fusion as well. And which we've already announced previously.
Minister, thank you so much for joining us on this important day of climate change announcement. Mr. Zahawi, United Kingdom Business Minister and Conservative MP. The construction noise you heard out during the interview with the good minister, Sir Francine Lacroix, putting a wind tower at her house here with wind energy of the United Kingdom.
We're going green, Tom. We're going green. Supporting the economy. Yeah.
We will see.
London. This is what happens. Everyone's doing DIY.
Yeah, well, we're seeing it here too. Home Depot yesterday with bang up same-store sales increases as well. On the economy, Ian Shepherdson of Pantheon and Macroeconomics. This is Bloomberg. This morning, there is evidence of a fear that this recovery in stocks, it is not to be believed. The bulls, the bears, they are sharply divided. There is continued Pacific Rim strength this morning against the dollar. There is evidence of a pandemic in Bulgaria, deaths double in 14 days. Adelaide, Australia locks down Senator Grassley of Iowa at 87. He tests positive. And there is no evidence of fraud. Michigan GOP, they reverse their refusal. The Pennsylvania Supreme Court crushes Trump hopes. And in federal court, Attorney Giuliani says, quote, those ballots could have been from Mickey Mouse. Good morning, everyone. Bloomberg Surveillance from New York. Tom Keene with Francine Lacroix in London. Some really extraordinary news flow this morning. You know, we've been talking a lot of technology today, Francine, and we see an Apple capitulation now. This is breaking news from Apple. This goes back a number of weeks over the fees paid to developers. They're going to slash those fees, no other way to put it. And it'll be interesting to see how this plays out on the regulatory front and, frankly, on Apple relations with the fanboys and the people all around that ecosystem. We'll do more on that in a bit. Francine, what are you looking at this morning?
Well, no, I am looking at actually Apple. I think it was gaining pre-market and now it's dropping a touch. Again, this has huge repercussions, but I think you've beautifully put it, Tom, in the last hour, is that, you know, the market is grappling with, on the one side, positive news of a vaccine that could come soon. And, you know, secondly, they're worried that there's not enough stimulus and that there's just not enough support out there in the markets as the number of infections rise. And certainly here in Europe, the number of lockdown also increases. And so it's quite difficult to see exactly where we take it from there, Tom. And you can see it in the data check today. Certainly in Europe, stocks moving sideways. And then you see Bitcoin. I mean, it's just going through the roof.
Yeah, well, Bitcoin up through the roof as well. Let me do the data here very quickly here. We're going to march into the hour as best we can. I'll lift to the markets. So futures up 9. The VIX is very important, 22.14. Dean Kernit's scheduled to be with us through the morning as well on that. 22.14 is an important statistic on the VIX. Dollar weakness again. It's fractional, but it really plays out across EM with the Asia index. This is something new for many of you. Asia DXY is the Pacific Rim currency pairs without the Japanese yen. It's not in there. ADXY out to new highs as well. Francine, what do you see in the data?
Yeah, so I wanted to also show you actually pound, just because we have a bit of news on the Brexit front. We could look at a deal as soon as next week. Overall, European stocks are rising, but they're really rising just by a touch. Investors weighing the rise in virus cases against optimism over a vaccine. And then I've said it, but I'll tell you again, Tom, Bitcoin surging past 18,000 for the first time since December 2017. Tom.
Right now, with all that's going on in politics, we've got 6 ways to go here, but the best way to go here is our chief Washington correspondent, Kevin Cirilli. Kevin, I really have to go back to, like, if you're looking at the Post or you're looking at the New York Times or Bloomberg, and there's that one moment where you say, you got to be kidding me. Let me get this straight. A legit former Fed prosecutor, someone acclaimed 20 and 30 years ago, went into a federal court and said ballots or counting or whatever is Mickey Mouse. How do the courts handle the former mayor of New York, Mr. Giuliani?
You know, yesterday I spoke with a source close to former New York City Mayor Rudy Giuliani, who essentially noted that there really doesn't appear to be a substantial legal team around the operation, Tom, in terms of what they are going to be looking for in terms of putting together a case. And so it would appear, based on all of the reporting that I've gathered, that it feels as if they're going through the motions. Now, in contrast to that, there is a real now substantiated concern about some type of election reforms over the long term. Maybe there's the potential for that. But those conversations, quite frankly, were happening even a year or two ago, back in 2019, when Senator Amy Klobuchar advanced bipartisan election protection reform.
Kevin, how does the Trump administration, and for that matter, how does the President of the United States regroup today, particularly after the Pennsylvania Supreme Court defeat?
You know, look, I think that from the Republicans' viewpoint, they are not going to even talk about concession or acknowledging President-elect Joe Biden until the results are certified, and so that's where things stand. Yesterday, President-elect Joe Biden, in a briefing with on national security with reporters, said that COVID is front and center in terms of the response that he would like to see. I was struck, Tom, by HHS Secretary Alex Azar speaking to our colleague David Weston, in which he said that they are not engaging in briefings with regards to the transition team of the president-elect. Now, he went on to say that at the bureaucratic level, they are going to be the ones enacting the vaccination effort. But I can tell you that this transition fight of public appearances and a lack of concession is definitely starting to pick up here in Washington, D.C.
Kevin, what's happening behind the scenes? So there was a story that actually when Kamala Harris showed up yesterday at the Senate, a lot of Republicans to the cameras have said we need to look into the election is not done and things like that. Actually went up to her and congratulated her privately.
Well, look, Vice President-elect Kamala Harris was on Capitol Hill yesterday, and it was, again, for her colleagues, a historic moment, as well as for her. I mean, this is someone who now is arguably one of, if not the most important Democrat in the administration besides President-elect Joe Biden. But in terms of immediacy, the policy here, and whether or not there's room for narrowed fiscal stimulus, we don't know. I would note yesterday, Judy Shelton, the president's nomination to the Federal Reserve Board, failing, which just going to show just how much every vote matters, especially in the Senate. Senator Chuck Grassley, the senior Republican from Iowa, announcing via Twitter that he was unable to vote yesterday. He was diagnosed with COVID-19.
Well, I look at that, and let's be respectful for the Iowa senator. The gentleman is 87 years old. Kevin, this is really, really serious, isn't it?
It is very serious, and especially as states across the country are grappling with the best responses and measures that they need to put in place, coupled with the CDC and federal health guidelines. Look no further than Ohio, which has enacted, of course, a curfew. Governor DeWine there, a Republican, taking fire from his own political party with some of the restrictions that he's put in place. This is really going to be playing out all across the country, especially as we now are just more than a week away from the start of holiday season.
Kevin Cirilli, thank you so much, Chief Washington correspondent. Greatly appreciate it this morning. There's terrific breaking news here. And Francine, I need to go over to the United Kingdom right now, where we see the Labour Party battle of titanic proportions with Mr. Corbyn, where I believe Mr. Starmer will not allow Mr. Corbyn into Parliament as he returns to the Labour fold. How big a deal of that is across Labour? I mean, it's a titanic announcement, isn't it?
It is, Tom, but remember, so we've been talking about, Mr. Corbyn being banned from the Labour Party for quite some time. This is on allegations to do with anti-Semitism remarks and that he wasn't hard enough also on his own party. And then we had news yesterday that actually, he'll join back the Labour Party. Now, if you actually think at how different this Labour Party is, Tom, under Keir Starmer, to what it was compared to Jeremy Corbyn has kind of really been sidelined, right? And there's, I guess, a true opposition if he can get a bit more support from the grassroots. But under Keir Starmer, they're actually doing very well in the polls, even more popular than Boris Johnson. So I'm not sure, the saga surrounding Jeremy Corbyn has as much weight as it would have, even 6-7 months ago.
Very good. And another breaking news here is we saw Home Depot yesterday with a really remarkable performance. Lowe's underperforms a little bit this morning. They do a share buyback of a substantial amount, $3 billion in Q4 is scheduled. But they're talking about store resets, and their same-store sales statistic comes in a little light. The banner there, 30.1%. I'm seeing, total comp sales growth being 15 to 20%, and that gives us a drop in Lowe's right now of a modest proportion. It has been, to be fair, on a moonshot coming out of the March pandemic break. Coming up, we move forward the conversation, the future of America, the future of the Republican Party. The gentleman from Arkansas, French Hill, will join us. With Futures Up 10, stay with us. This is Bloomberg.
Better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
With the virus now spreading at a fast rate, the next few months may be very challenging. We're not going back to the same economy. We're going back to a different economy.
Before we had this great news about vaccines, we had some pretty negative news concerning the second wave that really came about, certainly earlier than anything we had anticipated. That also has an impact on the outlook.
COVID may, interestingly, be the spur, the change agent, if you like. Second, we must now focus and push ahead hard with the necessary changes to support changing the direction of our climate.
Voices of central banks, some very good panels here. Particularly thank you to Stephanie Flanders running our economic coverage for a very sharp panel a few days ago. Right now, Ian Shepherdson with us. Ian, as we talk about the markets, we talk about a great divide between optimism on equities and people really quite petrified. And it does go back to what you do best, which is core measurement of an economy forward. What do you see for Q4? And particularly, how does the American economy shape up into 2021?
Well, there's a real tension here, I think, because we need to hold two kind of contradictory ideas on our heads at the same time. The first is that the virus wave that the US is suffering now is much bigger than the previous one, the previous two. It's going to push to maybe 200,000 cases a day as soon as the end of this week. As a result, we're seeing a wave of states and cities imposing new restrictions, lockdowns, curfews, business closures, dining restrictions, gathering restrictions. All of these things push the economy backwards for a while. But then we've got to think ahead into next year because obviously we have a vaccine. We have 2 vaccines and maybe soon we'll have 3, 4 or 5. And so I think it's possible to look into next spring into a kind of a moving into a post-COVID world where there's a huge amount of cash that's been built up by households, which they can start spending once they can go back to the service sector. I'm really pretty bullish. But before we get there, unfortunately, I think we've got a pretty grim winter ahead of us. And while I do think the case numbers are going to peak, hopefully by the middle of next month, that's not happening now. I mean, what's happening right now is a pretty relentless increase in cases and hospitalizations and ICU admissions and deaths. So It's grim now, but I don't think it'll be grim forever.
There is protests right now. We can bring this in with Ian Shepherdson as well. Francine, help me out here. This is in Berlin, and this is anything from all of Germany to narrow parts of Germany protesting what is called lockdown light. Some of the far-right members are looking at this as being a societal constraint back to 1933. Francine, just indicative of the sensitive times on the continent.
Yeah, it is true, Tom. And, we see this in parts of Europe. And, if you look at the side effects is that many people won't wear masks. Many people say, look, it's my freedom to travel and I don't need to stay at home. Ian, when you look at, we're looking at these live pictures together. And for our radio audience, it's just basically a picture of Berlin with what looks like hundreds of people flanked by, the policemen trying to keep them under control. But Ian, what does this tell us about how difficult it is to understand what the secondary effects of this lockdown mean? Will politicians lose re-election because of the lockdown? Are we creating more populism?
Well, they might lose re-election because of the lockdown, but they would definitely lose re-election if they let the virus run unchecked, because we can see all over the world where it runs unchecked, it puts hospitals under strain, it causes untold death and suffering. I realize that politicians unfortunately face the paradox prevention, the idea if they take action that people don't like, then they don't get the virus. And people say, well, why did you do that? It wasn't necessary. But it was necessary to prevent the bad thing from happening. But it's very hard to get some people, a relatively small share of the population, to accept that. And I think it's important to point out here that actually polling shows that most people are in favor of restrictions that slow down the spread of COVID. The people who are protesting are still a minority. They might be a very noisy minority and get disproportionate attention, but they are still a minority pretty much everywhere. I think most people recognize that action has to be taken, because the last thing we want to see is people being turned away from hospitals because there aren't any beds. That's the sort of thing that prompts the most severe restrictions. And I keep talking about this, about Israel's second lockdown, which began in mid-September. That began at the point where they really were turning people away from hospitals. And within 3 weeks of that lockdown, their cases had dropped by 80%. They've since dropped by a further 10% or so. They're now very low and very steady. But they had to be pushed into it. When they did it, it worked. But they had to be pushed into it by hospitalizations. The case numbers alone don't scare politicians sufficiently. They don't seem to recognize that cases today are hospitalizations tomorrow. So unfortunately, they tend to act too late, possibly because scared of these people protesting in the streets. But I think realistically, most people think that the politicians eventually are doing what they need to do, because unchecked, the virus is going to strain hospitals to the point where they can't cope everywhere.
Right. Ian, are we spending enough time talking about zombie companies in Europe? We had a great note by George Saravello saying, look, Europe will be back, but what happens in the meantime if some companies that are healthy are just not getting enough support?
Yeah, this is potentially a real problem. It depends where you are, of course. In the US, the Paycheck Protection Program ran out of money in August. Whereas in Europe and the UK, the furlough type schemes are still running, and in some cases scheduled to run right through till March or later. So the situation does vary depending on where you look. But your point about zombie companies is well made. I kind of think that it's almost like a necessary evil. It's a second order adverse effect from the things that have to be done to keep the economy in such a condition that when we are in a post-virus world, we've got something to come back to.